Well, hi, everybody. We just came off of a great session learning about ag tech, health tech, clean tech. I think you were just touching on, Bill, ed tech and cannabis, talk about macro, micro, ESG. And this is a great assemblage of people to, I guess, continue a discussion. We started in earnest to focus on impact 2 years ago with our event in New York, and we've always had impact panels and NextGen panels, and then we had NextGen summits, and so just to sort of set the stage. I think while we're going to go from keynotes onward, I'm hoping everybody can help us think about our 4th annual already and our 40th annual. I hope to be here. And where progress we're making on different fronts, and just seeing the opportunities to make above market returns and help the world. Those triple wins, we should do them all day long and more often. I'll just quickly flash through before I'll turn it over to our keynotes, and I do have a partner in crime here with Zach Nasser, who's sitting in Dubai, who's been passionate about these subjects with us for a while. So I'll let you say a few comments, but this is, as I look back a year from now, I'm going to flash this slide, and I hope to see a more inclusive group, that we've at least our funnel is more robust as it relates to impact funds, related funds and deals, and that we've done more, that we have a better sense of measurement, that we've done better at partnering. Just as we've done alumni connecting and family office connecting, that we connect philanthropies. Our foundation has been launched, that we've chosen 1 or 2 things to really put our shoulders behind. Right now we're on the listening tour, and to keep it going, I hope to have a fall summit. Maybe we're all in person or at least hybrid by then. And later today, the magic of what we do is in the roundtables at 12:10, where we'll move you automatically. You'll see already they're opened up. In fact, I can't really stop you. You can go to these, just like you could at a conference, you can go to these breakout rooms now, but you'll see that we have the rooms that we've set up are listed earlier. They go along with those goals and some of the themes. And then we'll have, be thinking of events within those groups, the takeaways, and then we come back to this town hall. That's really what I love. And I quote it too often, maybe, but since I've got you on, Turner, 2 years ago, and I think Torin was on, I asked everybody what scares and excites them. And in the town hall, Turner Smith said millennials. And then he was echoed by all the other millennials. So that became a millennial discussion, but we'll talk about NextGen, and that led to a NextGen event. So that said, if you don't know who we are, you'll soon learn. We're quite a community trying to navigate both investment landscapes and our philanthropies, and impact is right in the middle, right? I just see Maurizio Tota has joined us. It was a speaker last year. We got a great group here. I'm just flashing around, but Zach, do you want to say a few words since you're sort of co-captain here?
Sure. Yeah. Thank you, Mark. I'm really excited for the event today and to hear from all our speakers. Thank you for attending. I was going to share some general comments related to impact. Focus was on energy, since energy lifts all boats, right? Like if you have cheaper energy, quality of life improves. We could, farm more easily, do everything more easily. So some unorthodox or not frequently mentioned energy areas, fusion, which got mentioned earlier today. So a quick story. I have a nuclear scientist friend that I always ask, and he's a pretty realist or pessimist type person. Last year, his recommendation was on modeling only, like that's the best investment. But this year, a couple of weeks ago, in prep for this event, I asked him for his latest outlook, and he is actually optimistic on fusion, that it's on the right track right now. It's still a decade-long type road, but it's on the right way right now. So excited about that. Tidal Energy is surprisingly not used as much as it could be, perhaps. So it's an interesting area to look into. There are some commercial scale plants, but it's not as popular as wind energy. Geothermal, can we utilize like the skills from oil and gas drilling, right? Like, are there opportunities there as the transition happens away from fossil fuel in this coming decade? Finally, in energy, I came across this cross-country power cable project, Eurasia, between Cyprus, Israel, and Greece. So are there other opportunities for cross-sea cables to have an energy mix sort of between countries, where one country is stronger in X renewable energy and the other isn't? I was going to mention quickly about crypto. There is a possibility of cleanly mined crypto. We invested in one, actually. So if someone is interested in the hype or is a believer, you could have it completely be powered by renewable energy. Finally, I'll share a quick link now. It's about something sort of related to impact. I got surprised at how sophisticated it became now. It's sort of like online fraud in the US. It's a $20 billion industry targeting your grandparents usually. So this YouTube video just came out a week ago and it already has like 20 million views. It really simply shows you what's happening and some impactful people trying to tackle it. So I know it's a unorthodox area that's not usually talked about in our finance circles, but perhaps it's interesting for some people in the audience.
We do have
these are my remarks.
We do have cybersecurity coming up where that could overlap on April 22nd. Well, look, you mentioned energy, and I'm going to segue over to you, Valerie, and maybe you can, weave that into your segue here, in that that's really the heritage of the Rockefellers, and and where you've been transitioning, and as part of an intergenerational family office. Welcome, and take it away.
Yeah, thank you. It is Rockefeller. Most people think one thing, either money or oil. And so we are trying to change that perception, but that is absolutely the truth, of course. And first of all, thank you, everyone, for being interested in NextGen philanthropy, and also, of course, in responsible investing. I thought I do have like a speech I could read if you want, but I'm going to go with more casual, because I do know it is actually dangerous. Mark, you'd have only yourself to blame, but letting a Rockefeller monopolize anything is probably a bad idea. And in fact, since 1911 has been illegal. And but I always feel like I have to say, when Standard Oil, which is of course the main source of the family wealth and of the endowments of several nonprofit institutions, was broken up, John D. Rockefeller Sr., who is my great-great-grandfather, actually ended up making a lot more money, because he ended up with stakes in Chevron, in Amoco, and also in Exxon and Mobil, which then combined into a behemoth, which we have now been fighting for decades, trying to get them to be more honest about the climate science that they've done internally. And the last thing I will say is, one thing that I loved is one of my cousins sold her shares actually in ExxonMobil and turned all the proceeds to fund investigative journalism into ExxonMobil New, with a hashtag, the whole investigative journalism campaign, to find out what they knew. And frankly, if in the 70s, when their research was indicating, the carbon devastation that was going to happen, if they had shared that instead of using the money to repress the truth about climate change, we'd be in a very different position from where we are today. But to get to my topic, which is to talk about impact investing, it is a very personal decision. I think every decision that an individual makes, whether it's in what you buy, what you invest in, how you choose to spend your time, how you choose to use your networks, every decision that we make has an impact. And impact investing is the intersection in some ways of philanthropy and capitalism. So there's some type of impact investments, which are concessionary investments. We do not do concessionary investments. We keep a hard line. Me personally, and also the Rockefeller Brothers Fund, which I chair, in which divested from fossil fuels. I'll talk a little bit more about that. We want to not only continue funding, I'd like to be able to fund my lifestyle. It is, of course, I'm in a position of great privilege being born a Rockefeller, but there are a lot more of us than there is money at this point. So I cannot afford to, I have to live off of my investments. And my entire background is in middle school special education. That has been my career. And I've got 3 kids at home, 1 high schooler and 2 middle schoolers. So I personally do only impact investments that yield returns, and the Rockefeller Brothers Fund does as well. To think through the impact of the decision, not only your financial bottom line, you also have to think about the environmental, social, and governance aspects of that. And so the Rockefeller Brothers Fund also has decided to, we want to keep funding the philanthropy that we do. 60% of our grant making is in climate change, and all of it is either in sustainable development, democratic practice, or peace building. These are the components of a just and sustainable society, and there are a lot of interrelationships, obviously, between our program areas. We work in China, the Balkans, Israel, Afghanistan, Central America, and of course the United States, because the challenges that are relevant all over the world in terms of democracy. I do not believe we are really a democracy in the United States. We are an incomplete democracy at best, with an enormous amount of social inequality, which are the challenges that we're facing in other places that we're working as well, of course. So we want to be able to keep funding the philanthropy, the grant making that we are doing around the world and in the United States. And so we are not willing to lose money on the investments of our endowment, which are 95% of our assets. Nonprofits are mandated by law to give away at least 5% of their investment income every year. We give away more than that, in fact, and especially in the last 2 years with the global pandemic and the equally challenging and ongoing pandemics of racism and climate change, we've actually increased our giving, but still our endowment remains our main source of wealth and our greatest tool. So we decided to invest that in a way that aligns with our grant making to bring that power towards the philanthropy that we are already doing. So that's sort of in the Rockefeller tradition. There's the capitalism piece of it, which just very, very briefly is that John D. Rockefeller Sr., who is my great-great-grandfather, founded Standard Oil. He ended up, in 1870, he ended up retiring when he was 47. By then he had already basically formed what was considered to be the first multinational corporation. His philanthropy was every bit as global as his business. He, in China, was the first place that he tried to break into the kerosene market and failed there, but he started giving money in China and working with local philanthropists there in 1863. And to this day, we have very close relationships with China, especially around climate change. And so he took that wealth, then retired at 47, and then, it's a little bit insane. He's 2 years younger than I am. At that point, he'd already become the US's first billionaire and had made enough money that it's impossible to compete with him. There have been other successful capitalists in our family. Again, not me, I'm a middle school special education teacher, but other members of the family were early investors in Apple. My great-grandfather, John D. Rockefeller Jr., built Rockefeller Center, employing 30,000 people during the Great Depression. The third generation of the family, my grandfather's generation, helped redevelop Lower Manhattan with the Twin Towers. So there have been, the capitalism gene has continued in the family, and we like to prove through our impact investments, in fact, as manifest in our impact investments, because we continue to make money that way. And we want to bring capital, private capital, into this markets too. I do think that philanthropy has a particular role to play. It's like risk capital, we consider it. And then when you prove a case, then you hope it is taken up. If it's a policy matter, you hope it's taken up by governments. And in this case, we hope that we prove by having beaten our benchmark. We have a blended benchmark that we've been beating by 1.8% with 25% less volatility in the 6 years since we divested from coal and tar sands, because those are the most damaging fossil fuels. We're now down, we started at 6.6% of our endowment in all fossil fuels, and we're now down to 0.03% over 6 years with, again, with enormous outperformance, less volatility, and support of our grant making. The last thing I will say about impact investing is that it forces you to look at everything you do. There's an amount of transparency that is inherent in the work, because the metrics are so important. You, of course, are looking at your financial bottom line, but you also need to look at the impact that you're having with your investments for your mission or values alignment. For us, it's mission alignment. So for us to consider something an impact investment, it has to be able to contribute to our grant making as well. That means it has to be in clean energy or something that promotes democracy, and to meet that sort of metric. So overall, we will say that we are, 99.7% mission aligned, and that we don't have fossil fuels, but we hold ourselves to a very high standard for what we call impact investment. I'm sure this is a challenge all of you have faced. There's so much different terminology out there. There's so many different ways. It's a whole nother topic of measuring the carbon impact of climate finance. Yep. And of what companies are doing. So that is a responsibility the field has to try to bring more consistency to it. But for ourselves, the standards we hold ourselves to are not only around the environmental, social, and governance impact of our investment, we're also looking at the diversity of our managers. And Mark mentioned earlier that a goal that he's holding himself to accountable for next year is to have more inclusive community if you're, for yourselves. And I would imagine that would include your investments. So the goal that we've held ourselves to is to get to 25% of our funds that we invest in. The Rockefeller Brothers Fund does use an OCIO called Agility, who've been working with us for 6 years and have performed incredibly well. And we now have an additional goal for them, which is getting from the 16% where we are now up to 25% of our funds being managed or owned by underrepresented minorities. So meaning women and underrepresented people of color, the BIPOC community. We also have for ourselves a slightly higher goal of having 30% of the companies that are held by the funds having C-suite representation by underrepresented minorities. So that is the other aspect. I think we are actually going to save neither democracy nor capitalism unless we look at both, again, what I consider these twin pandemics of the racism and the overall climate injustice and environmental racism, primarily of the impact of the carbon that my family has had a large role in producing. And so we feel equally morally responsible for trying to mitigate. And at some point, we hope, and for the survival of our planet, it has to be by 2050 to get to zero carbon emissions overall. So Mark, thank you. And I'd be happy to take questions if anyone has any later on. Thank you.
So we had a prep call where we were going to have you speak, which you've done a great job. And then Kim Colt, who's an investor in Venture, but I don't see Kim here.
Hi, Mark.
Yeah.
Hi, Mark. I am on, but unfortunately we had some construction work going on next door and my power went out. So I'm just joining over my cell phone for now. I hope that's okay.
Okay, go for it. Well, yeah, take it over.
Yes, well, thank you so much, for having the opportunity to participate. And I missed some of what Valerie had spoken about, but I know how articulate she is, and I echo many of the same sentiments in that there's an inherent responsibility that we have, of course, to divest from some of the strategies that are contributing to climate change, and then to reinvest in the promotion of the technologies and strategies that, of course, can help us get to carbon neutral by 2050. I think some of the challenges have been in overcoming the barriers for getting capital into impact, because there's a belief that perhaps it's a newer asset class, or it's not stable, or the returns are going to be volatile, or less so than that of a traditional portfolio. But the thesis of For Good Ventures from the beginning has been quite the opposite, which is that the inherent risks in climate change have not been accurately priced into the markets. And therefore, a lot of the companies that historically have outperformed, because there's no precedent, are going to be subject to a number of risks and expenses, also political changes in litigation and consumer purchasing behaviors that will make the changes a little bit, make their stock prices more volatile over time. And therefore, an ESG strategy where you're at the minimum divesting from certain things, or at a maximum, you're really taking long positions in companies that are changing the world, are going to outperform. So it's both a returns and, the right thing to do for the future health of our planet. So I think where those two things align is where we like to invest, and not just in the public equities markets, but also, we do a lot in venture capital, looking for the technologies and the companies that are going to economically displace incumbent technologies and just make our environment or human health better. I hope that's a kind of a nice overview for jumping in.
Well, and thank you. And you've been on our venture / impact event recently, and so I know that you're investing where you're backing your policy in some of the sectors that we talked about earlier today. So let's move on to get Eric's perspective, and then we'll open it up. I mean, Eric, you in our prep call, you had an interesting way of continuing your provocateur role here, but you wear lots of hats, and a couple of them are relevant.
Mark, you make it so no one ever wants to go before me, because you don't know what kind of stirring in the pot, that poor Kim and Valerie are going to be subject to, that I go after them. Look, I mean, thanks everyone for being here. And I'll also say, like Kim and Valerie, I listen to what y'all are up to, and it's awesome. Like I think, you have some more progressive approaches on how you're investing capital than we do. I don't think there's a single right answer to any of this, right? I think everyone has the right intentions and is going in the same direction, and we just have some different viewpoints. I will, stir the pot a little bit with this observation from what we do. So our Family Connected Foundation, I manage the capital. It's close to $300 million that we have in endowed capital. That's primarily to support education, but we have some other broader uses of that capital. And just to paint the picture of kind of what we're doing from a social justice standpoint specifically, we've done extensive work, and I've personally been in East Africa in UN refugee camps for weeks, working on mentorship of entrepreneurship and providing microfinance on water projects. We have very deep and proactive work that I'm involved in working to reduce recidivism through bringing higher education and other educational tools to incarcerated individuals in the United States. That's in partnership with folks like the Chan Zuckerberg Initiative. And so, I would point to the uses of our capital and our proactivity in the way that we put that money to work as I think fairly progressive. Like I would argue that we have reasonably woke and progressive credentials with respect to some of the things that we're doing to make the world a better place. As probably the most ardent capitalist by background, as the approach that we have to managing our money is that we seek to maximize returns, because our view is we want as much capital as possible to bring to all of these uses. And I'll just, again, here's my major stir of the pot. I am not persuaded by any analytics that excluding certain asset classes entirely from the investment spectrum can possibly increase overall returns. And I know people have good arguments in favor of that. I am completely unpersuaded of that. It does not mean that we are seeking out sort of, unethical pirate businesses to invest in. But I think that there's a lot more nuance sometimes, and probably if we went and talked to some businesses that have been automatically excluded by folks that are looking for a purely ESG strategy within their invested capital, I think a lot of management teams would probably argue back that they're actually doing a lot of things to try to transition those businesses and would be able to do so better if they were actually not being deprived of capital and the ability to grow those businesses forward in a constructive way. And I know that, Mark, we're a little bit tight on time, and so I'll leave it with that sort of broad observation that our view is I invest in the entire market. We invest across the entire U.S. Public equities spectrum. We'll look at anything, again with reasonable sensitivity about where we're deploying capital. But I want to make as much money as possible at all times so that we have more to use for these recipients. And my closing example is. Outside, I have some other hats that I wear, as Mark referenced. One of those is I'm on a number of different investment committees and help other philanthropic organizations with how they manage their capital. We have I'll anonymize the institution, but we had a request from some folks within an institution. That the investment committee divest entirely from all fossil fuel stocks. And this is a pool of capital I don't manage. I'm just on an investment committee, but we have an outside fiduciary manager who's paid to run 95% of the invested capital. And they work highly analytically in the way that they allocate capital. And they literally came in and they have sort of, here are forecast returns for various model portfolios. And the returns from excluding fossil fuels at that point were markedly lower if you're suddenly excluding entire asset classes. So we literally had a conversation actually with the students who were involved and said, look, the forecasting from our money manager is that you're going to have some less money for scholarships and school programs in coming years if we take those actions. And it's kind of entertaining. I guess intellectually entertaining to see people's response to: would you rather have the best social justice outcome and the best sort of moral outcome, or would you rather have more economic resources for you in future periods? I think it's very interesting sometimes to dig into what the real human baseline reaction is, because the response we got was, yeah, maybe we'd actually rather have more scholarships. We'll go think about that and let's revisit it in future years. So I'll wrap up with that, Mark. I know that there's plenty of arguments, and I'm acutely attuned to these. Many of these fossil fuel and other environmentally and other socially damaging businesses are going to be worse businesses in the future. And that's fine. I don't want to invest in those, but I want to make an entire investment decision about with a totality of information in where I deploy capital so that we have the most money at the end of the day for our recipients.
So with that, let the debate begin. I put my little caveat. We open, we like point counterpoint. We're not political, but here we go.
Mark, Mark and Eric, may I speak to that if you don't mind? Well, Eric, I do appreciate your perspective. I do think, though, that there are a couple of factors that aren't being considered there. First, even before the vast correction in fossil fuel stocks, arguably accelerated significantly by the pandemic, there had been several academic studies and studies of the capital markets that showed that over time, if you were to change the viewpoint, the lens of the duration of what you were going to be holding in the public markets, ESG companies across the board who had those policies outperformed, say 2 to 4% since, I think it was, and don't quote me on this, but I think it was since 2010. And so there's a natural but softer shift even before kind of the rapid acceleration of the transformation that we've been seeing during COVID. I do understand including all asset classes is important to a diversified approach, but there are also two other problems with that. One is just by investing in them, you're encouraging the industries to continue. And that is incredibly naive in terms of the total impact and cost that it's going to have on the rest of humanity. And that's not just that's not just in terms of the inhabitation that's going to exist because of different weather patterns and disasters, etc. Those things actually do implement the ability for many humans and other types of life to be able to get their fundamental basic needs met. And then that includes the ability to educate, to learn, to get shelter, and all of these other causes that perhaps you're saying, I just want to make the highest amount of returns, so that I can give my family, those that have invested in our fund, back the most money possible so that they can then invest in those causes. What we're going to see, and I really do believe this, is a massive shift out of the investment strategies into industries like fossil fuels. And that alone is going to rapidly decrease the value of those companies and force pressure on them to change. And if you're stuck holding those investments when everybody else is getting out because they see the writing on the wall first, that's a poor investment, and it'll take a percentage of your portfolio down. Also, I think that there are some
Sorry to
Go ahead. Yes, go ahead.
I just want to keep it interactive.
Absolutely. Go ahead.
Hey, Mark, I have a sort of a question for the panel. This is Rob Colorina here. May I fire away?
I want to allow the answer though. Is it related to the question?
Well, you tell me when it's ready then. That's fine. I'll
hold your fire.
Yeah.
Mark, let me just
Valerie, do you want to touch on what Eric hit, and then?
Sure, I would continue, but I don't know if Eric wanted to go ahead or reply to Kim. Well, what I would say is, two things. One, everyone needs a different approach. That's why these are such individual institutional decisions. For us, for the Rockefeller Brothers Fund, it made sense to divest. We had spent over a decade trying to get companies like ExxonMobil to change, and they hadn't. So at that point for us, it made the most sense. Everyone's going to make their own decisions. Personally, I invest in ESG hedge funds, which do invest with companies who have upside on the improvement in what they're doing. So again, there's a toolkit that you have to look at what you have. I would say, again, just looking at our data, we have just this year where our alpha is 1.4%, again, over 6 years, 1.8% with a quarter of the volatility. The S&P, if you look at that, fossil fuel companies have been the lowest performers for over a decade. The stranded asset risk that Kim was referring to, I mean, just fossil fuel investments are just bad investments. I don't know how else to say it. And I'm sure you have a great money manager, and I'm glad you've done well and are putting the money towards great purposes. But I would just encourage some longer term thinking there. And then the last thing is, there are right now 65 million climate refugees. It's wonderful the work that you've done in refugee camps, but we are causing those refugees. And that is the tip of the iceberg about what's going to happen over the next several years and decades if we don't turn around climate change. The drought and the conflict in Africa, again, where you've done incredibly good work, it is only deepening every single day that we're continuing a fossilized fuel economy.
Yeah, so maybe Mark, a couple quick responses and sensitive that folks want to get to Q&A. So one, to be clear, and this is a reaction I would expect. We are not a pirate operation that is like seeking out world destructive investments to put capital to work. We are a philanthropic organization that is intensely focused on doing the right thing with this capital. To Kim and Valerie, to me, there's a little bit of an intellectual logic disconnect in saying, there are a bunch of forces that are going to cause this group of investments to be inferior, to provide inferior returns in the future. So you should not even assess those investments. Don't look at anything inside of that space. My response to that is, yeah, we'll look on a discrete basis. And by the way, I think fossil fuels is a terrible place to be investing. But I look at it with a lens of, on a discrete basis, what is the truth about the forward future performance of that business? right? And I think that it leads to many of the same conclusions, but without taking a monolithic view that we are not going to even analyze or understand what is happening in some of those categories that are off limits from a pure ESG approach.
Eric, I don't disagree with that strategy, by the way. But I just wanted to clarify that it's not this monolithic overarching umbrella where we're not going to continue to pay attention to the entire industries. I think that, if they come along to where they've completely embraced, as some of the traditional energy companies are starting to, the getting on board and using their size and their mass to be able to implement, clean energy, for example. There are certainly opportunities there, not only in just kind of holding those stocks, but other investment opportunities. So I just want to clarify, we're not excluding it just for the sake of excluding it. We're excluding it also because we don't believe that those particular investments will do as well.
Yeah, and Kim, and that's why I actually, as you recall, a few minutes, when I kicked off 15 minutes ago, I said, look, I don't think these are relatively more narrow gradations, right? Like we're not at loggerheads of 180 degree opposite these, but we have a slightly differing perspective that is generally aligned. But again, I would just take we're on the other side of a fence from my standpoint and our standpoint, which is, we want to maximize returns on a discrete investment basis. We won't rule out any large group. But I look with the same skepticism about on these individual assets within these categories for obvious reasons. Because look, let's take a step back. Regardless of what any individual capital allocators are doing from a macro standpoint. From a statement of capitalism, go look at what Elon Musk and everyone else who's investing around emerging extremely high growth green solutions for the future. This is clearly where all of the capital is going. It is clearly where all the returns are. We are investors in a whole bunch of Musk-related, SpaceX, Tesla, everything else. We have a bunch of capital with managers who are moving the world in that direction. I would look and say market forces, regulation, the macro reality of the world already has determined in most cases that anything remotely connected to fossil fuel in these undesirable categories already present worse return opportunities, right? So on a discrete investment basis, I would make the same decision probably 97% of the time, Valerie and Kim, as y'all would in looking at an asset. But we're looking from the standpoint of sort of the totality of potential return. And also to clarify, I can't remember who said it. The way that we maybe a little bit unique with what we're doing also is, I'm not a fund manager. We're running this, and then I and a couple of other folks in our organization actually make the allocation, gift and grant decisions. So we're also putting the money to work, right? So this is not managed for someone else. We actually I'm the one that takes the check and then goes and does the work. With all of our college partners and all of our other social justice partners. So again, I take a look and say, boy, I'd like to invest with a completely open mind and be making discrete decisions about each of these individual opportunities we have. And I will close with, I'm sorry, I've got the Texas flag up. They say it ain't bragging if you've done it in Texas. Our endowed capital at this point, our fund, in the last 5 years has been a top decile return fund in every single period in the last 5 years that we've been managing this way. So I also have a high degree of confidence about the way that we've been generating capital for these causes.
Hey, Mark, can I add something? It's Nelson Del Rio.
Hi, Nelson. How are you?
Hey, doing okay.
Although I do owe Rob a question, and if I go,
but no, this is right on point actually, because I want people to consider this kind of deeply. The discussion of ESG. And moving away from fossil fuels and everything else, and supposedly it's helping the people of the world. I would argue that the move to the kind of clean tech and everything else has created a more extractive capitalism at a global level, and the disparity we're going to create in developing countries is going to be greater than it's ever been. So if you want to measure something, we can't just ask, is it good for the earth in terms of the environment. What are you doing to the people 10, 20 years from now? I could have wonderful return. And let me, like Eric, I wanted to say, it's not bragging, you've done it. We gave away $300 million in assets. I'm still the chairman of the entities we gave away. And I did it because I came up with a structure to empower the people and create community wealth. But in doing it, I also could have flipped the switch and taken all the $300 million into my pocket. Very different things. So I could have had massive public works projects and infrastructure and solar and waste energy, and I can make sure that everyone is paying me forever to do it. So I think we have to go much deeper than just saying ESG and save the planet. It's the people we're worried about. Anyway, I just had to speak up.
Thank you so much for donating that money rather than putting it in your pocket, so to speak. And thank you for all your work that you've done. I do think the disparity in capitalism is a critical concern. And I think on the other side of the equation, there are policies and there are entrepreneurs that are trying to increase the access of funds and investment strategies for those underserved communities and demographics that have been left behind. So I do agree with you. I think one of the trends, and we might all have different insights in terms of how we feel about SPACs and what, and how they'll do long term. However, it is a modality in which many of these smaller private companies are able to start trading publicly, which enables them to take, capital from retail investors. Of course, I can get into, the responsibility of that, but also the crowdfunding regulations. I'm not sure if you saw last week, the Jobs Act, some of those increased, and they're showing significant improvement into women and minorities funding strategies. And in any case, I think that's a whole nother conversation.
So we're stirring up a lot of conversations, right? We're not able to finish them, but that's, and there are more, and there are some great people. So
Mark, let me add one thing so you can wrap it up. I just have to respond to that because I love what she's saying there, and I agree with all of that. I just want everyone to understand the distinction between a system that gives access to capitalistic growth on the part of minorities and underserved, and a system which by its very operation creates solutions and infrastructure and other things that extracts wealth and commodifies labor. Two very different things, and capitalism works in both. So you have to be very conscious of it. Anyway.
Clean energy creates more jobs than fossil fuels. We are very committed to a just transition to a green economy and are making those kind of investments in underserved communities, not just in color.
Yeah, I'm thinking ownership, not jobs. Equity, true actually ownership of the green energy. So solar fields, the waste
I
energy.
invest in both in West Virginia, which is where I'm from.
So what I would love, I know to the extent you can, this is not the last one, right? We'll have breakouts, the town hall, our drill. Not everybody can stick around for a 4-hour Zoom either mentally. So I like to first thank everybody for kicking this off. You did exactly what I wanted you to do in that respect. The debate, the flavors are there, and we also want everybody to be mindful of at least our community's goals as we say flash on the screen. Doesn't mean we have to invest only in impact per se, but if there's a great impact deal, I want our community to be aware of it and to get behind it. If we can have these triple wins. So with that said, there are many people enabling that from different perspectives, and that's our opening panel. So I'm going to transition over to part of the theme that Kim was talking about was changing the world, and Barry Adams is an ag tech fund manager, and I'm asking everybody to take 2 minutes, introduce yourself, sort of how you're seeing this discussion, and then we'll have a more Q&A.
Thank you, Mark. First of all, I enjoyed this discussion. I look at impact investing in a simple way. I want to change the world in a positive manner, and to do that, it takes a wide variety of efforts and people and ideas and energy. So I just want to congratulate the opening panel on that discussion. But changing the world is something that is not easily done. And that was also part of that discussion. I founded and run a venture capital firm in Des Moines, Iowa, and we look at science for impact primarily, but then we also look at cultural aspects as well. And so, our fund looks at, one, is the impact going to be in people? Is it going to be in science? Is it going to be in culture? Or is it going to be in climate? And those three things, I'll explore examples as we go along with the panel. But the VC firm we like to do is take science from universities and accelerate the commercialization of those sciences to impact as many people as possible.
That's great. And then next up, I know Rob Horowitz, you're on many sides of this discussion, right?
Yeah, hi. Good morning, everybody. I wear kind of two hats, and really appreciate the conversation that's going on. I've given a lot of thought to this area, and we do a lot of investing in broadly in both impact and ESG investments, as well as have a number of nonprofits that are sort of spanning this area. And one thing I wanted to just bring up is that a lot of people today have talked about profit first type impact investing, and I think and we do some of that, and it's very possible to do that effectively with impact in areas in climate change and alternative energy and environmental issues. Where we focus most of our attention on what I consider impact and nonprofit activities is in social issues, criminal justice, racial inequities systemically, poverty, non-represented communities that are just having have the systemic challenges that we all are aware of. And in those areas, my experience is there's very few profit first impact investments. And if you really want to make social impact, you have to take look at other courses of action involving community organizing, concessionary loans, investing in advocacy and communities rising up and helping themselves on these issues. So I just want to point that out, and I think it's another area where really what you run into is it's a zero-sum game. It's very difficult to have profit first because you're taking money from the communities you're trying to help. So Richard Lackey, your former.
Mark, do you mind if I actually went first, because I have to exit at 11?
Oh, that's right. Yeah, absolutely, Jonah. And you represent. You can touch on this theme, but you're also.
So I am a Gen Z, probably the only one in this room, so I can give you my actual perspective listening to this conversation. There's a lot of talk about environmental. When you talk about ESG and what I consider more conscious capitalism, yes, environmental plays a significant role, but for me and in my fund, we feel we have an incredible responsibility to include diversity and culture in those investments. And I can't tell you which ones I'm looking at, but I give you examples of several entities that I think represent that. One of which is a sim racing, esports racing, and real world racing company called Veloce Racing. They're actually in the UK, but they operate in Italy. They do several things that are diverse. They include women who are significant racers, significant athletes in their own right, very deeply in the content they create. I will say on the environmental side, what they do really well is they actually have a real world Formula E racing team with their gaming event. And so what they do is for every amount of carbon they emit during those racing events, they plant several trees in the Amazon. So they, as a team, are maintaining a carbon net neutrality focus. And they're making a significant amount of money. So you can make money and still be environmentally friendly. It's not like you have to be involved in fossil fuels to make money. Again, for us, especially in gaming, we probably have the most eyeballs as an industry than anywhere else in the world. And so for us, our responsibility is to take what all of you are doing in changing the world, and how do we implement that in our content and our products and our services. One great group of people that I like is called the Girl Gamer Festival. They've been offline because of COVID, but they're going to go online the next few months. But they are the premier women's only esports event in the world. And not only are they premier, but they actually touch a lot of regions that have had diversity issues. So one of their best teams happens to be the Saudi Arabian esports team, which is all women on a Saudi Arabian team playing Dota 2. So we are creating content that puts focus on a number of Saudi Arabian women who are probably not getting that exposure in their own country, because that's just the reality of the MENA region. So for me as a Gen Z and the incoming Gen Alpha, we will not be spending money on products that we think are going to harm the environment or harm other cultures or other peoples, because this is not how we grew up and that's not how we operate. So for us, it's not only a way to make money, which is great, but it's a responsibility as people. That's what we focus on.
That's great. I met Jonah in Miami, and Gen Z came up, and he like pretty much wowed the floor, and we welcome him every single day or week that he can join us.
Always happy to be here.
He's not gaming or investing in gaming funds. On that part of that point, I don't know if Tracy, are you Edwards, if you're on, that might be the segue over to you and what you're doing. And I know you've got a few slides, sort of touches on some of the themes that Jonah just hit.
Yep, sure. So
I'll pull the slides up in a second, unless you want to show your slides.
Oh, I'm easy. I mean, I can whip through them if you want me to share my screen.
Yeah, go for it. I'll stop sharing. Welcome.
Okay. Technology and I are not the best of friends. Are you still there? Because I now can't see you.
Yep. And I can.
Okay.
I have your slides if you don't.
Okay. So yeah, just to give you my background. So being a female sailor in a very male-dominated sport of sailing, I have to change the world every single time I do anything. In 1986, I put together the first all-female crew to race around the world, sail around the world. We entered the 1989-90 Whitbread Around the World race, 33,000 miles around the world, 9 months. Put together a team of awesome women. So there were 12 of us, 9 nationalities out of all of us, because we couldn't find 12 women in Britain who had that much sailing experience. We found a secondhand boat. I mortgaged my house, bought the boat, we restored it ourselves, and we set off in the Whitbread Around the World race to cries of they're just a tin full of tarts and they're all going to die. And no one actually really believing that girls could race around the world. But we won 2 legs, 2 of the hardest legs, and we came second overall. And eventually, because no one else would sponsor us, we were sponsored by King Hussein of Jordan under the flag of equality and peace, which was pretty extraordinary for that time. In 2018, a feature documentary came out about everything that we'd done, which kind of really revived the sort of the maiden story. And whilst the film came out and we were making lots of new friends, I actually found Maiden. I'd sold her at the end of the race and decided to buy her and restore her. We crowdfunded to buy her, and then King Hussein's daughter, Princess Haya, very generously helped us ship her back to the UK, where we restored her to her glorious former beauty. We then decided, what are we going to do with the boat? The boat was launched by Prince Charles and the Duchess of Cornwall with Princess Haya. And we partnered with a number of very small girls' educational charities around the world. I'm passionate about girls' education. I think the impact of educating girls for 12 years is, I think it's the solution to every single problem that we have in the world if all girls were educated. So in November 2018, we set off on a 3-year world tour. We covered 22,000 miles. We visited 33 destinations in 12 different countries. Before, of course, in March, we were ground to a halt. But in that time, you know, we visited schools and communities. We showed the film. We have thousands of children putting their handprints on our spinnaker. We have a message of hope. We work with very diverse groups of young women. What Maiden does when she sails into a port is she really opens the door. She makes a massive impact. And any community that we work with uses Maiden to open the doors to girls and women's imagination, because Maiden shows girls this is what you can do if just one person believes in you. We've been lucky enough to have our first 2 Maiden voices, our first 2 ambassadors are Whoopi Goldberg and Jamie Lee Curtis. As I said, we came to an end in March last year. Ships float back to the UK. The crew are all off doing different things. And we spent the last year fundraising to keep going and also restructuring what we're doing with the Maiden project. We're focusing much more on STEM subjects. We're working with a number of organizations who are actively recruiting women and girls into industries where they need STEM subjects. We're very well placed to do that, because one of the questions we get asked a lot when we have hundreds of schoolgirls down on the boat everywhere we stop, and the question they will ask is, how do you get to work on a boat like Maiden? So the crew always tell them, well, you take science, technology, engineering, or maths. So you're already pushing against an open door. We'll be working with lots of communities when we get going again, hopefully in September.
That's great, Tracy. And we'll come back to you and everyone. But one last person is Richard Lackey. He also is on earlier panels and doing some very interesting things. We talked about ag tech earlier. There are also some really low-hanging, low-tech things that we can all do together. But Richard, want to introduce yourself?
Delighted. Thank you. And I appreciate the conversation this morning. And as a former 8 years in medicine and 25 years in asset management, I now spend most of my time kind of at the confluence of solving social and economic challenges while still working to make money as well. So I understand a lot of what folks have said. I would throw in a couple of ideas here. One is that I like using levers better than hammers. So sometimes when we just cut funding from groups rather than being an active investor and telling them, why don't you redirect dollars to this or we'll pull the funding, it helps. And sometimes you do that and they don't react and then you pull the funding. But a lot of large institutions have the ability to move or direct investment, not only their investment then, but catalyze that investment by other large firms, oil and gas companies, for example, into investing into other things. And so that's one thing. The other is that I do find it more valuable to be an investor than a donor. And I sit on the board of USAID, and actually Raj Shah of Rockefeller Foundation sat on my board for a number of years. And we found that, you know, we spend
a Michigan alum, by the way.
Pardon?
Just saying, Michigan alum. Go Blue.
Yeah. But we spent billions of dollars in aid without a complementary effort to develop business and sustainable and resilient systems by which those people could lift themselves out of poverty. And in the countries where they had very little help, they've actually prospered well. And where we've dumped donor dollars on them, they have not prospered as well. So now the methodology, I think, that's being approached by AID as well as others, and including the dollars that we've spent under the World Food Bank, have been focused on systematic development. So to the point of that Barry made, it's not easy, but it is the way that things have to be done. I'm very opinionated in that way, but focusing on one area, building better seed doesn't solve it. Fixing the water doesn't solve it. Building railways, as we've seen, now you have countries that are like Ethiopia and Kenya and others that are billions of dollars in debt to the Chinese because they've built all this infrastructure with no sustainable governance, no sustainable business, finance, and other things that go behind that to have a system. So what we do at World Food Bank is we come into a specific geography and we build an integrated agricultural value chain that works. The thing that we found to catalyze that, which will probably be more applicable for this group, is we recently bought a media company, an award-winning media company that does what many of you may have seen on TV as the home and garden TV, the home makeover shows. We actually do farm makeover shows and farm competition shows and entrepreneur training and entrepreneur competitions. And we have 12 million viewers just in Kenya and Tanzania. We're now taking that across the continent of Africa and soon into Indonesia and Southeast Asia. And we've had studies done actually by USAID that have showed one of our new programs coming into a specific area, testing before, during, and after relative, what's the alpha relative to other methodologies. For about $1.2 million investment, I lift about 1.6 million people out of poverty permanently. So over 18 months, they go from the edge of poverty to the edge of middle income. That's change. And we do it profitably. And our returns are actually on the upswing. We'll be going from the low 20 IRRs into the mid to higher 40s, I believe. And that's partly because of the database we have, where we have hundreds of thousands of people signing up every month to get our free information. And so we're building a relationship with them. I think that for us, that's our secret sauce. And I think there's opportunity to do that if you have the focus and the will to go and seek out solutions like that, you'll find it. I'll stop there.
So you've also hit upon a theme in the U.S. We talked about waste, food waste. I'd be curious for you to, just looking for low-hanging fruit. That seemed to be a really low-hanging fruit.
It is. One of the things we first started doing was building what we call the Global Food Exchange. We took technologies that were already existing. We essentially are plugging in different technologies to create a new system. We manufacture, we take foods. Some of them are excess strawberries from California and excess peaches from Georgia, and we dry them. We put them with pasta. We create pasta primavera, chicken cacciatore, Southwestern chili for the Southwest. We don't put grits in New York. They only like them in the South. It's regionally specific meals. The meals in Puerto Rico are Puerto Rican, and they're dried and they have a 20-year shelf life. So we're able to be there in advance of a natural disaster. We're able to produce those at about a third of what the government normally pays. And we also are now working to do a rollover program called the Zero Hunger Initiative, where we're going to fill the gap for all the children who don't have breakfast or meals in the evenings or weekends, because we can produce a fortified 26 minerals and vitamins, 700 calorie meal for about 15 cents. And we're using food that was excess from grocery stores and farmers. So we take their stuff, we put it through a cleaning process, a drying process, and repurpose it. And
I'll just ask people,
all the technology.
If my team could just share the video from our past event that you and I think that'll cover. We'll go. I'm just looking for low-hanging fruit all around, whether it's philanthropic impact or just pure investments. And you're onto some things, which I like. You've heard these opening panelist speakers. Any questions now? Maybe Rob, I'm sorry to cut you off.
No, it's fine. Interesting panel talk. Appreciate it all. My question was from the first panel, but I guess transfers through. It's on.
Hey guys, I'm on. I'm just. Oh shit.
Sorry, Duncan.
Hey, Duncan.
It would be wrong call. Sorry, wrong call. Sorry.
It would be a conference if you didn't do that.
Yep. Sorry.
Go ahead. Carry on.
Yeah. So my question was on recognizing returns here, and I'm not sure if Valerie's still on, but it's great that she's made time this morning, because they were sort of early on to this. But I'd be interested to hear if a couple of folks can chime in that from the panels here, how it's gone from from the charitable side to pretty competitive, seeking return. And I think maybe Richard, just your perspective on the internationals is interesting to that. So that's where I was coming from earlier, Mark, and I appreciate what you
Anyone want to take that?
I'll respond quickly if you'd like. And I agree with Valerie and Kim in that if you're looking for those returns, the emerging and developing markets are the place to go. As a former commodity trader and volatility trader, you go where the best risk-adjusted return is. And we're not talking, and I come from criticizing portfolio managers all over the world for them looking at Kelly ratios versus Sortino ratios, for looking at net returns versus relative returns, and so on and so forth. I've personally dumped almost all of our personal net worth into development in sub-Saharan Africa. We're now modeling for expansion into Latin America. Somebody had asked about Amazon. That's actually our next workspace. But there are places to go, but you have to put the pieces together. People that focus on one area, it's tough. So there's two things that you have to do. Either you have to start large enough that you can build a system, or you have to have enough collaboration that you can keep everything intact while you grow it. That being said, if you have the dollars to do it, you can actually force success, just like in the markets. Some of you may think you can't move markets. I moved them for 25 years, and I made a lot of money doing it. We can actually force success in markets where there's such inefficiencies. We can create those models of efficiencies and actually force them to be adopted. If you have media where you reach 12 million people a week, if you have better logistics, if you have better storage, if you're able to put those things together, you can solve those problems. And if you have specific ideas, I'm happy to talk about them, but they from food to ag to fintech, all of those. And if you think about places like East Africa, the chairman or the CEO of the largest commercial bank in Kenya Commercial Bank, was telling us a couple of years ago, actually, that 92% of their loans are made over a phone. 92%. That's not the case in the United States. They have 5G in Kenya. They have 5G in Uganda. They're launching 5G in Ethiopia. They're actually trying to leapfrog in many of these areas. So if you're able to tap into some of that, there's real opportunity to.
I want to let others, but I just threw the slide on because at 8 o'clock, our principals and institutions were talking about how the best deals are happening so fast. How do you diligence them? And part is, there's an Africa deal. I don't have a roundtable yet, but you're now part of that, right? And as it relates to ag or whatever. So that's partly what I'm looking for 361 to provide. But let me.
Can I?
I have a couple. Go ahead.
Yeah, I just want to chime in quickly and say the investment process in ag tech is not necessarily farming. We don't do precision farming at all. And so when you think of ag tech, I want you to think of things that impact the world and can change the world and can have multipliers that are only seen in SaaS plays. And as one that we presented, the 361 natural fiber welding is a plant-based manufacturing system that replaces plastics and polyester and leather. And this technology is not only sustainable, but it's scalable. And so, we went through an entire year presenting this technology to various offices, and Ralph Lauren invested $5 million, Allbirds invested $2 million, and Smart Shirts, the second largest shirt manufacturer in the world, invested $4 million. And the technology went in December, we closed around at $70 million, and now the company is valued between $200 to $300 million, and that's from December to March. So I want you, when I talk about impact investing, we're talking about replacing plastics, replacing leather, replacing polyester. We're talking about returns that can be astronomical in the course of measured time, and we're also talking about things that are impactful to the world. And I have other examples, but I'll let the panel speak. But I'm just giving you what the it is.
Yep, and kudos for that.
Mark,
yep.
Question. What about mental health with regard to impact? Being that we're coming out of maybe this COVID, and obviously I specialize on the addiction side, but mental health in general, I think, is going to be one of the most important things, that will have a return on investment. And and there's plenty of money to be made and returns to be made, but we also have to think about what's the ROI of a human life, of saving a life, right? But if you look at both bottom line and double bottom line, yes, the addiction treatment center is a $42 billion market.
Let's let people. Anybody want to comment on that?
I want to follow up on something Barry had said.
Okay, and then we'll hit MJ. We're going to talk about philanthropies and venture and breakouts. So continue. But and the education, we see a lot of gaps. There's ed tech, and we need a lot of mentoring, and just think of addicts needing mentoring, right? So it's a huge.
Mark, I have a comment on MJ's.
Okay, go Rob.
So what I've seen is that there's been a tremendous proliferation over the last year on due to the mental health crisis created by COVID. There's been a tremendous influx of online and alternative ways of delivering mental health care, and the number of startups is just massive in that space, and they're really gaining traction, and it's a way to deliver more broad-based mental health services effectively and efficiently, because just the physical capacity of providers is pretty limited, and geographically it's a real problem. So if you live in rural areas and where there's a lot of isolation and COVID's really hit hard, the only way to get those services is remotely and digital. And so that's really happening now.
Zale, you want to sorry. Every one of these subjects deserves a deep dive, right? We should go back to the mental health deep dive, MJ, we were going to do, but Zale, if you can keep it quick, because we need to move on to the 11:10 panel.
Sure. So Barry mentioned something about impact, and he was talking about taking a new technology and replacing an existing, genes growing cotton with a new type of plant. So I'm in indoor vertical farming, and what we're doing from an impact point of view is we're stopping trucks from going from California, Arizona, and Mexico to the East Coast. So impact can be just totally replacing an existing business.
Well, Richard's talking about, 60-70% of the cost in Africa with logistics chains. So yeah, that's definitely part of it. Now I got Chas and Zach. Chas, you're up first. Go ahead.
Thank you, Mark. First of all, I want to just give everybody a big pound for just the attitude and the focus and approach. I think I've found my home, Mark.
We've been here. We're here for you.
A couple of things. You were talking about low-hanging fruit, and the threads that I'm going to lay out tie in with what Richard was talking about, and certainly what Barry was talking about. But the notion of Richard's applying solutions in frontier markets. Mm-hmm. And what I'd like for this panel to ponder is the notion of our urban environments in our country, in America, being frontier markets. Mm-hmm. And the notion of applying the same thought process around sustainable economic development solutions, where, as Richard pointed out, there have been far greater advances in markets outside of the U.S., where the best minds have come together for impact investment and developing new models around accountability and avoiding moral hazard with government through your activities. Sure. The low-hanging fruit I see is cannabis. And I've come to believe that cannabis can provide an economic vein, sustainable economic vein, to our frontier markets in urban America. But the way things have been structured, as you know, post-prohibition, people of color who have tremendous experience with this plant all of their lives, multiple generations, the way legislation, regulation, and license has been set up, it in effect excludes people of color. And if we can create sustainable economic engines, that's going to lead to more jobs. And I believe that there are financing structures that could be brought to bear in our own frontier markets, and leveraging cannabis as that economic catalyst. That's my low-hanging fruit, Mark. And thank you, Richard, Barry, and everyone again for your heart.
So
because you're doing it for the why.
Well,
you're not doing it for the return, but you're doing it for the why. But if we can generate great returns and still accomplish our why, that's a super win.
Yeah, I want both. I'm okay with the capitalism, and I just want to filter and channel and support and overcome some of the problems that we've, some of the barriers and hit those low-hanging fruit. So cannabis is definitely an area we want to focus on, showing some slides. So Zach, I want to.
Yes, just a quick plug for 361 Foundation, actually. And Tracy. So I just wanted to say we're planning to do an event focused on girls' STEM education, and with Made in Factor, maybe we'll do a screening of the documentary, maybe something else related to sailing. And if anyone is involved with STEM education organizations, focus on girls especially, let us know. And you could also support them and go sail on the Maiden. That's something Tracy told me about. So keep on the lookout for an event on that.
Yeah, no, I appreciate it. I wish I could have heard more from all those speakers. I want to transition now to, and further on the impact side, we've got people who come at it from the credit side, again, above market returns, focus, and with an impact screen that would be with BYF Capital. I see Gigi on the call. Catherine, who's from the measurement side, Looney, who's been with us, who has some really great slides showing those the triple win, and then Russ Vaughan, actually someone running a company, which is always nice, how they're living the dream. So I don't see, maybe we got too many people up. There's Gigi. Okay, so Gigi, could you just introduce your perspective on all this? You're on mute though. I get a beer every time I say that. So.
Hi. Thank you, Mark. And I wanted to say that this is my first 361 event, so I really appreciate the conversation, and thank you to Mark for the opportunity to share here. A couple of themes. One of the things I've been hearing in this conversation is how impact is not just ESG, and I think nomenclature aside, the larger idea is that we're all trying to find ways to make choices and make investments that are more meaningful to the people and the world. So just wanted to kind of put that out there. In terms of myself and my background and how I came to be here today. So I kind of came into, call it impact, sustainability about 16 years ago when I founded my company, Plum Organics. Really focused on infant nutrition, but it wasn't just about the nutritional aspect, but it was also lifestyle. And I think, from there, we've really seen in the last probably 12 to 15 years, how lifestyle and what people are calling quote unquote values are becoming much more meaningful in how we think about the world and consumers make decisions. So after we had our exit from Plum Organics, we sold to Campbell's in 2013. I became the CEO for a nonprofit called Healthy Child, Healthy World, which we ultimately merged with the Environmental Working Group, and just kind of continued my work around education for healthier and sustainable choices for families. Along the way in I would say, gosh, what year is it now? I sort of lose track. In about 2.5 years ago, I met my partner, Rich Nisvola, who Mark knows. And his family office and a cohort of family offices were really starting to think about how to invest in, maybe differently in the better for you food and beverage beauty space. And so along the themes that, Jonah raised earlier this morning, BFY is really focused on, what I sort of say impact with a lowercase I, in the sense that we know 83% of millennials shop their values, and we know that 70% or more of Gen Zs influence their parents' purchase decisions. And at the same time, better for you CPG consumer of which 70% is, the growth is driven 70% by food and beverage. And we also know and have seen the statistics around, how much food, is sort of the culprit, if you will, around, climate and environment. So with all of that said, the market opportunity in, better for you consumer, which includes food and beverage, lifestyle supplements, household various categories, is tracking to be 300 billion in 2023. So from a market opportunity perspective, it's huge. And we also know from a consumer perspective, it's, as Gen Zs are getting older, having more spending power, all of those things, the convergence is real. So from our perspective, our strategy, as you mentioned, is more of a debt investment strategy. It's non-dilutive. It's much more about wealth creation for the founders. And this industry, I always say I sort of feel so lucky to have kind of happened upon it, because people are really kind and generous and really, live the idea of values alignment. And so people who have their exits, much like myself, we stay in the industry and you kind of continue to invest and you have that flywheel effect. All of that, while still achieving, from BFY's perspective, our goal is 15 to 20% adjusted returns. And, just really wanted to kind of put it out there that impact is not limited to ESG and that we think about it more from a community and collective perspective. So thank you.
Oh, thank you, Gigi. Our next two speakers, you'll see, we're on here March 9. And I don't know and there's actually Kim as well. It was on whether Looney or Catherine. I happen to have Looney, your slide from that presentation. I thought you helped frame it a bit. You want to take the wheel? You're going to have to take the wheel in terms of the slides, or I can, if you remember this presentation, I can flip as well, or you can talk about whatever you want. Just go.
Yeah, okay. Well, we can start with this slide because first thing I heard when I jumped on this morning was Eric saying, I got to make the most money, right? So I can give it away. This dates back to Andrew Carnegie. Like that, he's the godfather of this. Let's go make the most money. Let's actually kill our employees to make the most money. That's what he did.
Well, that's not what Eric was saying exactly.
I know he wasn't saying that, but that's where it heads. It's like, okay, literally, if we're going to invest in oil and gas, we are killing people in the world, right? You have to admit that we are killing people in the world by using oil and gas. We need to get off of it, otherwise the planet dies. So make as much money as possible so you can give it away. That's the rhetoric here. So if you go back to that other slide, right, the corner in the top left corner is investing. It's Wall Street investing. No, the previous slide.
Yep.
Make as much money as possible and don't care what the impacts are. That's what Wall Street has been doing for 300 years, 250 years. And philanthropy on the other corner is saying, we want to give it away. We want to have the most impact as possible. I don't want my money back. It's 100% loss investment in an investment lens. And impact investing is everything in between. And so it's possible for people here to say, okay, I want to do impact. I don't want to give up my returns. I want to have some impact. And that would be the top left corner. And it's totally possible for people to say, I have enough money. I want to do philanthropy, but I want to recycle the money. I would like the capital back, the principal back in the debt terms, so I can reuse it over and over again. And I don't care what the returns are. It could be concessionary in terms of 0% return. It could be concessionary in terms of half return. But there's a lot of people who are doing that. But fundamentally, they have to understand that that money will slowly disappear over time. And then there are a bunch of us who play in the middle, aiming for the top right corner, which is we want to have as much impact as possible and make a decent return. And we're doing that. And so what I wanted to talk about today in this group was just the fact you have to understand, if you're looking at ESG and public equities, right, and public debt, those companies were all startups a while ago. Sometimes a while ago for Apple was 40 years. Sometimes for companies, we're talking 50, 60, 70 years. For a lot of the blue chips, we're talking 100, 120, 140 years. But those companies were at one time new companies. They were the new darlings. Before they were blue chips, they were startups. We know who started them. A lot of those entrepreneurs made a lot of money and became philanthropists. But ultimately, if you look back in time, those were all new companies. And so if we're trying to make the world a better place and fix the problems of the world, you can't necessarily look at 120-year-old companies and say, I got to invest in them. They're going to do it. Right? They're going to add women to the board. They're going to give more to charity. Therefore, they're good. They got good ESG ratings. Let me put my money over there. What I focus on is new companies. If we're looking for new solutions and new ways to solve problems, we got to look for new companies. And I think it was Rob about an hour ago said, he can't find enough deals and therefore they're concessionary. And I find so many deals, I don't have enough money to put in them. And I think the difference is that I'm out there looking for everything between brand new. Brand new is really risky, but if you do enough of them, you can de-risk it. But I find lots of companies that have a few 100,000 in revenues, that could be a few million in revenues in a year or two. And so what I do, what that Fledge logo is, which is my logo, we run a business accelerator. So we literally tell the world, if you have a good idea and it's impactful, if it's mission driven, apply. And we run programs all over the world. Thousands of people apply. We're overloaded with deal flow. We pick a handful at a time. We invest money in them. We invest more later, and they're succeeding. They will be in 50 years. Yeah, so there's the network of programs. We've done over 100 companies around the world. Every country that's orange, we have a company we've invested in that country. Every place that's not gray, we've seen an application. So basically everywhere. And so in 50 years, right, you got to look at the long view here. In 50 years, these will be the blue chip public companies, and they will be doing good in the world. And we will have made an enormous amount of money along the way, right? Enormous, like, 20, 30, 40, 100x, right? The opportunities are humongous.
So just again, going around the panel, Catherine followed you last time. If you could just do your shortened version as well, Catherine. Again, we'll make it up in the roundtables and then follow-up events.
Sure, Mark. Hi, everyone. Catherine Griffin. Delighted to be here with you all and to just sort of listen in on this really dynamic and engaging conversation. I mean, our work is all about enabling investors to understand the impact implications of their investments, to have all of the numbers and all of the analytics on the table so you can understand what the how impact and revenue relate to one another. Fundamentally, Looney and I are very aligned. We're working with companies that drive impact as a derivative of sales. And so impact creation is often correlated with revenue growth. And so we put all the numbers down on paper so that as an investor, you can sort of understand the efficiency and efficacy of a business model as a lever for impact. You can understand for every dollar of capital invested, how much impact is created. And sorry, Mark, I'm not sort of following these slides. I'm happy.
That's right.
So
I'm just trying to follow you.
I know. So if you go back to the previous slide, I mean, this is sort of our fundamental, thesis around what is social impact. This one. So, if you think of social and environmental challenges as massive problems, and entrepreneurs fundamentally solve massive problems, they then create massive value.
But Catherine, I think I want to go to your special sauce. I think that you're preaching to the choir. Okay. You're on my screen. You're right next to Torin Kutnick. 2 years ago, he says to Rich Nespola, "But how do you measure it?" Right. Yep. Well, now we finally got some measurement experts, and so talk about that.
And so I've often heard of sort of the impact measurement and management space referred to as alphabet soup. There's a lot of different frameworks. There are a lot of different approaches. It can create overwhelming confusion for folks. And so, given time limitations, I don't want to sort of talk about necessarily all of them and how we compare, but fundamentally, we provide quantified, verified, and accessible impact data and analytics for founders to implement in a way that allows them to A, better execute on their mission, B, leverage it to drive sales and marketing, and C, engage impact investors. And so, Mark, what you have up on the screen is sort of our fundamental methodology. There are 3 components to it. The first part, we define a company's impact metrics. What is meaningful and measurable for a given innovation. This might look like carbon emissions abated. This might look like increased income or revenue for certain marginalized populations. But we define it here first on the ground, and then we align with global standards like SDGs, like the IRIS Plus core metric sets, et cetera. As these additional frameworks come online, it's really important that the analytics we generate are compatible with them. But oftentimes there's a disconnect. And so we begin first with what the innovation is on the ground, and we align with global standards. Then what we do in the second step, and Mark, if you don't mind going back one slide, and then I'll speak to this report.
Keep going on. I'm on 3 other places right now, but go. Keep going.
Okay. So then in the second step is we basically break down a company's business model. We quantify impact on a unit level. A unit could be a product sold, it could be a user, it could be a farm or a school or a prison or a utility. We quantify impact on a unit level compared to a baseline. And this allows us then to extrapolate both forward and backwards based off of sales and revenue projections or sales to date. Happy to provide more examples if helpful for that, but that then generates total impact outputs, KPIs, or quantities over a given term, typically 5 years. Then in the third and final component, we translate impact into economic value. So we look at what costs are saved or what new value is created as a result of impact creation. This allows for a number of new and really interesting insights and granularity. Again, happy to speak more to that. But then what we do is we simply multiply the economic valuation times the total number of impact outputs from the second component, and we generate summary analytics, including a total social impact projection and various derivatives of that number, including an impact multiple of revenue and an impact multiple of capital invested. And so we generate a report that's sort of a high-level outline of these analytics supported by sort of data validation where we show all of our work. But fundamentally, what I think is really valuable is this core modeling infrastructure or framework within which a company, particularly early stage companies, as they grow, as they learn more about the efficacy of their innovation to drive impact, as they collect more primary data, they can actually refine their models over time, and it becomes this stable impact management framework. And then the analytics are sort of automatically updated as the model itself evolves. So super quick and dirty, would be happy to answer questions.
So I want to full circle it to have Russ Vaughan, who's Vaughan Timbers, if you could share your story as you were introduced by our good friend Turner Smith, and because you're from a company perspective.
Yeah, Mark, thanks for having me. Happy to do so. Yeah, my name is Russ Vaughan. I run a company that uses traditional building products like lumber and turns them into glulam beams, which I'm sure most people have seen, but we've also created a product called cross-laminated timber that's been brought to market in Europe for about 15 years. And we do so in a very unique way. I live in Northeast Washington, so about 50 miles south of the Canadian border, 50 miles from the Idaho border. We live in a forested area where forest fires burn, and I'm sure all of you have seen the smoke and the fires in the West over the last number of years. And I think a lot of people just chalk that up to climate change, which is definitely attributable to that. But the big thing that we have is forests that are overgrown, unnaturally overgrown, to the point where when wildfires start, and these are fire-dependent ecosystems, now they burn out of control. And so what we do is we've worked with local, national environmental groups to come up with strategies to go out there and actually thin those forests and actually try to find where the forest is best in terms of its natural range of variability. And then we have to thin the forest in order to get the biggest and best trees left behind, which is a big paradigm shift for most folks. So we take the byproduct of that forest restoration, if you will, and we turn it into these products. And the images that you're seeing there are, if you could go back up there a little bit, Mark, to the other image of our product and the process there. We are also a very tight circle. So the forested area around us within 50 miles is where we get our product. And so it goes from a traditional lumber product to then a mass timber product. And then this is where it gets even more unique, because we're taking, and in my estimation, we don't have good calculations for this yet, because we can model the forest and where it's going to burn. We can go out there and thin those forests, get them into a state where they can actually withstand wildfire, and then turn that byproduct into new products, so that we can build academic buildings, houses, commercial structures, and all kinds of things with wood. And we store that carbon that was embedded in that wood from its photosynthesis in the life of that structure. Not only that, it's recyclable. So, you know, there's a big market for solid sawn wood beams, for instance, that were used to build a lot of the cities over a century ago. And now there's a real nice market for those things. So imagine being able to block together these structures in such a way that we can recycle and reuse that product. That's really fascinating. On top of that, we're competing with heavy carbon input industries like concrete and steel, and we're replacing that with a lightweight component of wood. It's beautiful. People love to be in and around wood, and if it's got a really good sourcing story, it makes it even better. And so that's what makes us different, is we're really focused on from the forest all the way to the frame of the structure. And we love to tell our clients, and in some cases even take them to the forest where their products came from, so they know that this just didn't come from some clear cut that is replanted and will someday be a forest again. This is actually coming from an area that we're doing a proactive approach to the environment and adding new building materials at the same time. So
we've just heard from, you know, a private credit fund, I'll say an early stage platform with Looney, Gigi being the former. So, and then a company's perspective, and then you have Catherine, who provides measurement, which helps on the front end and middle and the back end of all this. But what questions might people have?
Well, one question I have is maybe to Catherine or to the entire panel is, given the option of investing in impactful things, using the example of a solar company, how do you think about investing in a business like a mature solar business versus investing in a EMP company that, on the other hand, is, you know, driving a dirty product, but who has recently taken steps for a more balanced gender-led board, and who drives actively ESG parameters towards change? So it goes to a little bit of that baseline versus steady state question.
I'll take that one. That's a good question. Basically, you can think of the framework as two prongs of impact. There's how you run your company, and there's what's the company does. Right? So the ESG world is mostly about how you run the company. So literally, having a woman on the board is a positive in that case. You get a point. In the certified B Corporation world, if you recycle your paper, you get some points, right? If you give it to charity, you get some points. That's all good, but to me, that's not good enough. That's not going to actually make the world better, like in a long-term fashion. It's just, to me, those are just things that companies should be doing anyway, because they're the right things to do. What I focus on in my life is what's the actual impact of the product or service? Does that make the world better? And you get to balance those. So if you're building a broad portfolio, I'd say do a little bit of both, because you're going to find very little direct impact in public equities. There are very few companies that are actually have a positive impact in their product or service. So on the public equity side of your assets, do ESG investing, but don't go down the path of the standard, 60-40 equity and debt and put most of your money in public equities, because you won't have enough impact in the world. You're going to have to take some other risks and invest in other things that are moving the ball forward, that are private, maybe on their way to be public someday.
If I could, I would take a more agnostic approach to answering this question. I think it's for the investor to decide. The question is, to what degree do each of those sort of prospective investments drive impact, and with what quality? And unless you have a proper analysis of both of those, you can't make the decision. But it's really for the investor to decide what's important to you, and sort of the outcomes of the investments you make. But you want to be properly informed.
Other questions? Go ahead, Gigi.
Sorry, I was just going to build on that and say that really BFY's perspective kind of brings together both Catherine and Looney's view. Looney, I don't know, I may be saying that incorrectly, I apologize. Because we look at it as we're supporting the ecosystem, and to Catherine's point, right, like we're early stage, we're supporting entrepreneurs that are trying to solve massive problems, and through that we're moving the industry. And so it's not just about metrics like minority founders, but it's the trickle effect of what the company is actually creating and what the company is actually making.
So maybe I 2 years ago, Torrin, you asked the question, and I'm going to transition to the next gen. Often it is the next gen's pushing the envelope. Well, first of all, reflecting on what you've seen here, do you have a new question, or how do you think of the last 2 years, and where we can go to help with the measurement question?
I think it's great that this conference has gotten bigger. I think more people are looking at impact, and at the same time, I'm more concerned about impact than ever. This week's headline on why you should be concerned about impact is that Prince Harry was recently appointed the Chief Impact Officer of BetterUp. The CEO said he was going to have a meaningful and meaty role. Can anyone tell me what that means? Can anyone in the impact world tell me what that means? I would love to know. So I am worried this term is being co-opted, manipulated, and unless we have people like Catherine digging in, figuring out what's actually going on, I think this term is going to get snowed. I'm deeply concerned about it, and I think the ESG space is getting more complicated as we have different players in it, and we need more complex levels of evaluation. So I don't have a question yet, but I'll get there.
Can you, just by way of introducing, now back to you, what you do, what you focus on, particularly as it relates to this?
So I manage programming and endowment for a foundation. We have a major focus in environment, and within that focus, we do something called PRIs, which are program-related investments. So I think PRIs are probably the highest standard for impact that we currently have an official designation for. It allows us to put nonprofit capital into for-profit entities, assuming they are more effective at achieving our stated goals of mitigating some of the effects of climate change. So the standard that we are looking at is like offsetting a gigaton of carbon. I mean, that's a hard number. And we want to kickstart that. So we're willing to take, high levels of risk in that space to kickstart those initiatives, because we think that's the only way we're really gonna, have an effect on climate change. Simultaneously, I also manage the early stage venture portfolio of our for-profit entity. And within that, we're helping scale impactful businesses through, for-profit capital. Capitalism is an essential piece of this pie. If we're going to scale impact, you need a profit motive. Profit motive is what's going to drive the costs down, so that for 90% of people who do not care at all about impact and who only care about price are going to adopt these solutions. But we need both sides of this equation. You know, what Eric was talking about earlier, we need to use the capitalistic levers to drive down the price of impactful things so that people don't have to make a decision about what is an impact. They just, you know, buy what's cheapest, and because of people like us, hopefully they're going to end up buying things that are the most impactful.
Okay, fair enough. So switching gears, well, actually, I see Nelson, you just popped up. So I think you were there 2 years ago as well. You want to introduce your perspective, Nelson?
Yeah, absolutely. Actually, I fundamentally agree with what Torrin is saying, that capitalism is the answer, and utilizing the efficiencies and levers that you can in it to make it competitive on the market is necessary. And that's a part of it. But, kind of giving my perspective, I'll stay kind of at a global mission level, just given our time constraints. For me, really have decided my life to dedicate to serving people. I'm a capitalist, I'm an investor, but also as a person who wants to create a paradigmatic change in how capitalism is applied. I'm a 23-year-old NextGen, and I believe in our world that we need systems level solutions to address human prosperity directly. Otherwise, capitalism itself will be threatened. And while we as a community have gone through the necessary phases of adopting the ideologies and practices of sustainability, innovative financing, growth and impact, whether it be circular economy, ESG, SDGs, or otherwise, and we are now questioning, or beginning to question at least, how to approach social equity and justice, in particular race and gender here in the US. I think we need to go further to a more fundamental issue. Actually, that's something my father, senior, kind of was touching on earlier. How do we solve for all these metrics and drive human and economic development that is not extractive and does not commodify labor? Basically, how can capitalism be applied to create private wealth while at the same time optimizing the wealth of individuals and communities that it's serving? And I think, something that we've all talked on that's kind of a fundamental piece of that, which is the transition to clean energy, whether it be green or blue growth. It's crucial, but in relation to the community, commons, public goods, and services, I think as impact investors, and especially those that are next gen, I think we should ensure that in the process of that growth, that we do not commit as ourselves as investors over extraction of that wealth that subsequently will lead to gross consolidation of it or generate harmful commodification of labor. And I guess the question at the end of the day should be, particularly with respect to the commons, who owns equity in it? And this is not just about creating certain jobs or the wage that we're creating with that. And well, let's kind of think, well, for example, a well-intentioned project in Africa for a solar field or a fishery by, let's say, Northland, New Zealand, or a developing town, right? Where does equity and wealth generated go at the end of the day? And wages and jobs aren't going to be the massive wealth generators. So to create sustainable, financeable, and profitable business-centric solutions that have truly deep-seated impact, I think we need an approach that is holistic with human systems and outcomes that are cross-collateralized. We can't just solve fisheries and not solve waste treatment. But it has to be one that is just and equitable by being human-centric and bringing prosperity to both humans and the commons, something that we call prosperity of the commons, as opposed to tragedy of it that Garrett Hardin had saw. And that's kind of why, my family and I, as an extension of our past and current ventures and kind of activity that we're currently doing, founded PeaceOut, which is an international development company, which I'm CEO of. And over the last year, we've been really working hard on pushing this development. And many of the things we are currently working on in prosperity-centric economic and human development, for example, in South Africa and Latin America and elsewhere, we're doing development projects, prosperity-centric financing, education, prize work, next-gen adoption of these sorts of things. But for us, a huge focus needs to be that this is a movement. It's the same thing how ESG and sustainability has been a movement. Mm-hmm. Now it has to be, when we're creating that, we're investing that, how are we creating equity and wealth within the people? And that's something that's kind of connected to something else that we had co-founded, a company, Blockable, which is a pragmatic business application within a solving or addressing housing dilemma.
So, the first time you explained it, I had to ask you to explain it a second time. And it really is a paradigm, as you say, and a movement. So we won't give it its fair shake at the moment, but we'll have these breakouts right after this panel. So someone new to our community, Marina Cvetkovic, we spoke at 6 a.m. this morning. But if you can I told you just come and see our community, sort of see it real time here. We've been at this since 6 a.m. by the way. But maybe introduce yourself and your perspective on the NextGen project.
Yes, definitely. Great to see everyone and looking forward to meeting you more in person in breakout rooms. Yeah, so new to the community, I do have a background in finance. I started my career there. And then at some point I realized it's not really my world. And I stepped out of the financial services world and started focusing on really supporting executives and leadership teams in simply becoming better leaders. And so I've been doing this for quite some time. And what I've noticed in working with boards and executive teams that, while everyone talks about diversity, most often we think about gender diversity, we think about racial diversity, but we don't necessarily think about generational diversity on these levels. And I think that's such a missed opportunity, and that's something that will need to start to shift. We are facing a situation in which average age, at the board level is 64 plus. And, we have to kind of pause and ask ourselves, is this the right kind of structure that will really lead our organizations into the future, right? Particularly given the moment that we're in right now and the pace of change that we are facing at the moment, right? So it's that balance between legacy and legacy knowledge is very important, but then, bringing in new, fresh thinking, innovative thinking, arguably perhaps more sustainable oriented, future oriented, long-term oriented thinking of the next gens. And so that's kind of how the NextGen project really emerged. The NextGen project is a community of 500 plus brilliant NextGens from across the world that are between 25 and 35 years old across all industries, nonprofit and for-profit. And they come together to essentially support leadership teams and boards through reverse mentoring and NextGen advisory, and help kind of open up the thinking and broaden horizons when it comes to various topics that are really relevant, right? And some of the things that we have seen emerging lately is definitely, the future of work, for example, right? Particularly this past year, a lot of organizations started thinking, what does that really look like long term? And who better to ask than NextGens, right? And who better to engage in dialogue with than with them? And sustainability is another one, right? A lot of the sustainability efforts and strategies are really long-term strategies. And so it's really the NextGens that will live it and breathe it. And so, the more we can involve them, I think the better off we are, in establishing something that is really future ready and future proof. And so what the NextGen project does is basically gathers this community, right? And B is offering then this advisory service to, leadership teams, executives, and boards. And this can be either like active approach, right? So reverse mentoring sessions, advisory sessions, either one-off or, more like a strategic partnership. If there is a particular challenge that a leadership team is facing during a longer period of time, or simply tapping into this community to get some insights, right? So some of our clients say, hey, we don't think our leadership team is really ready to engage, but perhaps, if we can bring some research, some insights or surveys on what does the NextGen really think.
Marina, can I give you a real example?
Yes.
Maybe you can join me, but you're in Zurich. But the president of the I guess was it the Brooklyn borough? He's running for mayor.
Mm-hmm.
You know, people in their 30s and 40s who've moved out of New York in the last year aren't moving back. People in their 20s, early 30s, New York is a bit more affordable, and we have a venture. So my message to him was, I think that there's part of your audience that you need to talk to, but do you want to join that discussion? It's a little late for you.
Yes, that was exciting.
I'm
Absolutely.
not picking a candidate, by the way. It's just sort of part of a policy discussion. But there's one more voice here that I wanted to bring in, and that's Jonathan Levine. I don't know, Jonathan, there you are?
Hey.
Yeah, if you want to just sort of give your perspective, please.
Well, I left New York. I'm in my 30s.
You're not coming back. Maybe you'll figure out how to get you back.
So my name is Dr. Jonathan Levine. When I was 19 or 20, in like 2001 or 2, I was the president of Students for Socially Responsible Investing. And we were talking about ESGs and negative screens back then. I decided other people were better at policy, so I was a technologist and I could do science. So I got my PhD in environmental engineering, and my wife and I ended up creating this company. So what we do is we use sustainable materials. Can you actually go back, Mark?
Sure.
We use sustainable materials with the goal of creating a safer, cleaner, and healthier world. Now you can go forward. That's kind of the key point. And the way we do that, go to the next slide, please, is we've got 3 product lines. We've got Folio Water, which is a 20-cent, 20-liter mass market water purifier. Basically, how do you solve universal access to clean drinking water? That was my master's thesis, was UN development goals, we'll do water and desal in Africa. Well, instead the really way you do that is you let the BOP consumers, the base of the pyramid consumers, buy their own water. You leverage exactly what Torrin said, which is when I was like 20 in 2002, I went, well, how do you get people to solve these problems? You let them do it. You let them buy it. You make something 1/10 the price of anything else on the market, and then people will adopt it. So we make a 20-cent, 20-liter water purifier. It's like a coffee filter. And we commercialize that with Unilever. Because of COVID, we made these handy-dandy antiviral face masks because 50% of hospitalizations in emerging market are normally because of water. Now, of course, it's COVID. So we made antiviral COVID masks. And then Tyson actually came to us and said, hey, could you make food packaging for microwaves? And my wife had actually done that for part of her PhD. And she said, actually, that's really easy. And that's, of course, paper, not plastic, for food packaging. You go to the next slide, please. So, we have these several different use cases, antiviral 3-ply face masks. We work with Unilever on 20-cent, 20-liter water purifiers. The reason is everybody can afford mass market consumer products, right? And anybody who's in the commercial sector, which is sort of you're making $2 a day and above, which is all but really sort of the civil wars and the ultra poor. 90% of the world can buy commercial products. They buy soap, they buy food products, they buy cleaners. They could be buying a clean water purifier. But how do I, as a PhD inventor, get my product out there? We do commercial activities to de-risk with the goal of having Unilever take this to 100 countries. Because the one, that kind of company can get this everywhere fast in a 5 or 10 year time horizon. With Tyson, same thing. You can take a microwave food packaging and we can do paper and not plastic, and instantly you're everywhere. And we actually go up the food chain from them. We can take all of this plastic packaging and make it into paper. Next slide, please. That's possible because we're a silver coating company, right? So my wife and I are both PhD material scientists. We do our own consumer work in all sorts of countries and whatever, because as technologists, so most of the people on this call are finance people. And so it's how do we leverage finance? Well, I looked at that back in 2002 and I decided people like you were smarter than me at that kind of stuff, but I could invent stuff that was 10% the cost, and then we can go and monetize it, right? So we have a silver coating, which was my wife's PhD work. And the whole point is that this works on standard industrial scale equipment. So we don't ever target luxury niches because luxury niches are a very small amount of the market. So I'm wearing a 3-ply mask, not a $20 or a $100 cloth mask, right? We target Walmart, we target mass market. Now we go through giant corporates to get there, but we target industrial scale, cargo container scale volume manufacturing. Because if you really want a good lever, you go all the way back to the manufacturing and you say, I want all the products to be made with paper. I want all the products to have functionalized paper, and we do all this for pennies, right? I mean, the whole thing is it has to be cost effective, exactly like Torrance said. People are going to buy on the price. But that lets us do something that you're definitely not supposed to do as a brand new, we're now 5 years in and whatever, but like our first company, we went after universal access to clean drinking water because of exactly what what Catherine said, right? You have 2.1 billion people who are in the commercial market, but who are drinking germs in their water. Well, you ought to be able, they're all buying soap right now. They're all buying food products right now. Why aren't they buying safe, clean drinking water? Because we haven't made a product for them that's affordable. And what I'll tell you is there's $58 billion of bottled drinking water sold in emerging markets to the wealthy and the middle class. Okay, that's what's going to happen. The world's going to be bottled water for the lower class and the lower middle class. And so we're going after that the same way that Unilever goes after it with soap. And in the same way, we've got our antiviral face masks. Face masks are here to stay. This is not going to be the last pandemic. There's a post-COVID world, right? So making safe drinking water, it's 20 cents, 20 liters. We're identically the same price as other products in the local version of its little mom and pop kiosks, little retail shops. But we're identically that same price because that's the willingness to pay. Same thing with our face mask. We're down at a sub $1 price point because that's the willingness to pay. But that lets us do clean water and sanitation. We always use, we're fundamentally a green materials company. So green chemistry was a late 1990s, early 2000s term. It's really nice that the impact world is right now we have it there as well. But in the technology space, that was kind of the, how do we switch over to paper? How do we switch over to less bad? We use food grade chemicals instead of using blah, 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 acid, horrible poison. We just use food grade chemicals to do all of our chemistry. And then there's all the other knock-ons, which is, if you don't know that water is a women's issue, right? The mother of the household is always the family health officer. That's true in the United States. That's true in Bangladesh where we work. Yeah.
So we've heard of Torrance, a second gen. I know that I have here, Zach, you've spoken earlier. If you want to chime in, you actually brought us Jonathan and Tracy, of course. Nelson also, Marina is working with 500 of them. And what I wrote earlier was, I don't have a next gen goal per se, but I do want to, I call it listening, mentoring, I guess reverse mentoring. I think my intern from 2005 showed me Facebook, right? I was like ahead of the curve. But I want to, and then empowering next gens, of course, funding their ventures is part of that, but not only. And I still remember, again, going back to you, Tora, and when our friend Turner Smith said what I asked everybody at the end of this town hall, I asked what excites and scares us going forward. He said millennials, and you echoed him. You said you're also afraid of millennials. So what do you think of your generation now, your next gens?
I think they've got a lot on their plates right now. I mean, they're at this life transition point where many of them have had to rethink family, career, where they live. I think unless we make impact easy and accessible for them, we may lose them. I think it's important that we lift the burden of making impactful decisions off the consumer and put it on companies. I think we may, make the companies choose to make everything, in a thoughtful, responsible way. And so that millennials who are limited in terms of time, energy, et cetera, can make the right decisions easier. We have to make doing the right thing easier. I think more than anything, that's what we need moving forward.
Torrin, I wrote that article for our student newspaper in 2001. I couldn't agree more.
Well, do you think things have gotten easier?
Oh my gosh, so much easier. Do you know that organic was something for crazy hippie people? And now it's just in your regular grocery store, and plenty of people are like, well, there's less pesticides. That meatless Mondays, plant-based protein. Oh my gosh, this is wonderful. You got middle class, suburban people. Here in Boston, we've got a vegan restaurant or a vegetarian restaurant. You got the Wall Street type A types standing at the front getting their vegetarian food before anyone else. That's amazing.
And the price is falling too. I think, the fact that a Beyond Meat burger is now getting to price, I mean, it's not quite parity, but it's getting there. It's getting there.
Yep.
And it's a great entry point into thinking about how you can be, you can do these things.
Torn, I absolutely agree with you. And I think one bit on top of that is, in order to make that functional or true within our market, that we can actually have informed actions, or that we're keeping the companies true to what they're kind of claiming, we need to create the proper and real-time actual information platforms. So we're actually tracking those supply chains and value chains. And part of the issues, I mean, we talk about, for example, like MSC and things about non-slavery. Research shows that even when they're saying that there's no slavery on those boats, there actually are slavery on those boats. So having proper reporting of what is happening and keeping it accountable, I think, is kind of a part of that step.
Yeah, let me add one thing as the older Del Rio to that. MSC as a standard for sustainability in fisheries is a really good example, because yes, they did move to reflect slavery on the boats, but what they never ask, and what no one eating a fish here in the United States will understand, is the poverty that we drive in those SIDS, in those small island developing states, the starvation, the lack of electricity, the lack of sanitation, the lack of education, all so we can have a sustainable fish product. So I think the West has a wonderful view of how to save the water in the world and the planet without understanding its impact on the people that are part of the chain. And I mean deep value, not just the things you're seeing in ESG or SDGs. Go ahead.
Other thoughts from NextGen?
I was going to mention patient capital, Mark, as a topic of discussion, because it's been popping up lately more than before, and especially in innovation initiatives I've seen around. So the idea is like family offices would be more patient investors, especially in some, deep tech type companies like the fusion energy investment I mentioned earlier today. So what is everyone's thought on this, since it's related to the first discussion of the keynote panel of, returns versus not returns, and like the time scale, and it links to NextGen because returns affect NextGens, right? I guess, yeah.
I actually think we need like almost a new capital asset class. So there's a lot of existing businesses that are good businesses, but don't quite know how to become the sustainable or impactful businesses of the future. And I think we need a new type of capital to help them transition. Like as part of me wants to be like, Exxon's the bad guy, they're polluters, but the best way to, win this is to make your enemy your friend. I mean, I think we need a new type of patient capital that can help with the transition from the old economy to the new economy. And I don't know whether it's a growth.
Where were you at the beginning of this, Doran? You should have weighed in. Should have been that NextGen bridge.
I was thinking about it, but Eric had some good points I wanted to hear. So,
can I say there is a model for this?
Yes.
In 1986, Statoil, the Norwegian oil major, had a slide showing carbon sequestration, and they said Norway is going to run their economy in 30 years not on pulling gas out of the ground, but pulling CO2 into the ground. 1986, they had that slide. Exxon had those same slides. Exxon has the smartest people. They're amazing. No one ever said, like, they might be the enemy on some things, but they have the best people in the entire oil industry.
100%.
My PhD was on carbon sequestration, on how do we get the oil companies to think about making money. And instead of saying, wait a minute, this is a bad thing, it's like, well, if you have the same oil infrastructure, who's good at running it? Who's good at large capital projects? The oil majors. Get rid of the CO2, get paid. Norway did it. Norway's absolutely on that track to thinking about monetizing that way.
Should we hear from an oil man who's down in Houston? Chris White, you want to weigh in on this?
Am I the token representative of the old economy here?
Well, you represent many things, but
I've had a great time, and I have learned a lot listening to this, and I appreciate it. I think I would like to offer an observation here to help you move this kind of thing forward. Sometimes language is power. And I think grouping so many of these things under the category ESG is a disservice to what you're trying to do. There are way too many metrics here, way too many dimensions, way too many things. And it reminds me of a category at the bottom of the list, which is usually called other. And I know that that's how a lot of my peers look at this. So I think you should give some thought to changing the terminology here in a more constructive and useful way. That's my observation for the morning.
Well, let me, since we do have you here, how do you, because we can't transition out of oil overnight. We need to make use of it during the transition. Where do you want the oil industry to be in 5, 10, 20 years?
Well, this is a very complicated question, Mark, and no one can easily answer it. I mean, we don't have to use any oil. In a decade, you could be done using oil. It would only make things like power 5 or 6 or 7 times more expensive. And it's hard for me to see how that is good for the world when so much of the world is economically challenged, let's say. Not going to make much difference to me. Maybe it won't make much difference to you, but it will make an awful lot of difference to an awful lot of people in the emerging world. So I think there's a balance here that has to be struck. I think there are some hydrocarbon uses that are better than others, socially speaking. And I think that there's an opportunity here to do something on the carbon side, sequestering CO2 and rejuvenating the forests and doing a lot of things. But if I look at our little business, and we're not Exxon, and we're not as smart as they are either, Jonathan, you're right. We're as capable. But I am certain that although there are a lot of people here that think I'm busy poisoning the planet, that we have done a lot of good in the emerging markets where we operate, Mark. I am sure that we have lifted a lot of deserving people out of poverty. I am sure that we have brought people into the money economy who weren't even in the money economy previously. We have sent a lot of people to school. We have made a lot of very bright, very well-trained, capable young engineers, most of whom leave us and go other places to do other things. So I think that I think this is complicated for me to think about, and I trust that it's complicated for you to think about as well.
Yeah, I'm just trying to keep it real because we're not in an ivory tower. This is
Hey, Mark, can I just comment on something Torrin said a little bit ago?
Yep.
It's Rob here. Torrin, I hear your logic, but I don't think it's necessarily a next gen versus the current gen. I think a lot of this is education, and all to be educated and open-minded. On the back of Chris's point, or sort of the the carbon economy, I think you would look at some things like Saudi Arabia of how they're viewing the transition and being proactive, and even looking at the automotive companies, and they're both investing into the business and joint venturing unique things. So yeah, it's at the end of the day, if an asset manager is looking at both, renewable versus traditional, at the end of the day, you got to look at relative value. So it is.
You're going out of there a little bit. No, I think we got the
for a good while, and a lot of the legacy industries are still powerful and.
So we've had a, Chaz, is Chaz Walker on the line?
Yes, I'm here, Mark.
So I know people always, someone told me yesterday, like, well, your network doesn't like private credit because you give people 15 choices and then only 8 people go to private credit. That's because you're competing with cannabis and you're competing with this and that. So inclusion got 0, which is one of your points of your 3, your 3 points of inclusion and finance as well as cannabis. And was it, what'd you call it, NextFem or no, FemTech, FEM. But let's just go around from those who reporting from the, venture was, like 50 people, it seemed. NextGen had a good group, and we had, and then impact measurement, and then education. So why don't we start with venture? Was so huge. I think that is where you make the most impact in many ways. So I'm
Hey, Mark, it's Chaz. Are you saying that if I would have gone to the inclusion room, I would have been alone?
I would have been there with you.
And NextGen was inclusion, really, mostly.
Mark, can we talk about opportunity zones and impact? Because I think, especially what Chaz was talking about, opportunity zones are 40% poverty rates, inner cities, tremendous opportunities to create impact for American citizens.
Yeah. We talked about it today. There are several groups that do it. It was all the rage for a while, but it's really happening. We're making some deals happen, even venture deals. Was that one of the themes? We didn't have, that was one of the empty rooms too. But let's.
What's going to happen to opportunity zones as we move forward? It was obviously born in kind of a bipartisan spirit with Tim Scott and the other guy, but it has Trump's fingerprints all over it. Do you think it's going to survive?
I think it's going to be huge. If you're doing anything in those spaces, both city, state, and federal gives you extra points. So if people are doing businesses and starting businesses, you'll want to place them in opportunity zones. Forget about the capital gains part. And if Biden raises the capital gains rates, all of a sudden people are going to be flocking to put their money in there.
Yeah, there are it doesn't always have to be real estate developments. It can be a business located in an opportunity zone, and there's a whole tax shielding of capital gains aspect that can boost returns too, in addition to the business itself being a.
I'd like to see an event that we get to see the real players. We have 3 funds on our platform and 2 independent sponsors, so we could shed light on that. Let's just say, let's park that one.
Yeah.
What themes came out of venture?
Who's the designated speaker?
I think when the session ended, we just got done introducing everybody.
Yeah, exactly.
A lot of intro, but also a lot of trying to drill down on what specifically ESG means to various people and various parties, and probably the need for some kind of regulation or specificity around it. That is kind of where we got cut off.
Gotcha. Well, can you just summarize though, where, some themes beyond that?
Me?
There's a lot of confusion over what the
value proposition is for each of these and how that measures in with the portfolio, right? So depending on where people are in their portfolio design, if they're looking heavily on returns versus heavily on impact, sometimes there's a skew. And if they want to vary across that, their returns and their other metrics may be skewed as well. They're not all in a single box. And I think that's part of it, is people want to be able to aggregate all of the social and the ESG into one space, and then put that together with the alpha or the return against markets. And it's not that way, because both sides have variances, right? The market side has components of risk, and the ESG has components of risk and impact. And so there's still that complexity, and there's a lot of organizations doing it. People referenced, I'm on the advisory board for IRIS, which is the Global Impact Investment Networks group, sponsored by Rockefeller, but there's half a dozen out there. But I really liked what Catherine, I think, was talking about earlier, creating specific metrics based on it. You have to get to where the math is. And I would love to hear from anybody that differs on that. But if you can't qualify it and quantify it, I'm not sure how much value it has. So that would be the stake I'd put in the ground and ask people to work around.
Yeah, I was going to say, just like you were saying about Catherine and assessing impact, and Torrin saying, what is impact? Just because you say your impact, and Prince Harry, the example that Torrin gave, we have to really have some sort of benchmark to what impact is. So I think that's something that's very important for us to, kind of bifurcate what is impact and what are people just saying is impact that sounds nice in order to, achieve a secondary goal.
Yeah, so there's a growing use of the term greenwashing, right? And
Absolutely.
The cynic argues that a lot of people are motivated to wrap the ESG flag just to achieve their goal, right?
100%.
Hey, Turner, you add to that greenwashing, poverty washing, blue washing, carbon neutral washing, SDG washing. It's all been just insanity.
And there's a depth of it as well, right? There's levels of it. For example, you have, like we were saying, you have companies that say, well, we're going to stop investing in Exxon, but we're going to move our money to Patagonia and North Face and whatever, that happen to make all of their products out of petroleum-based materials. So at what level do
China,
you, right? You know what I'm saying? So you have to keep on drilling down, and having worked in this space for 15 years, it's really, really difficult if you're trying to get rid of everything. So you're going to have to come to metrics that you're seeking rather than avoiding. I think avoidance is troublesome. Seeking out results and performance is a much easier goal.
I think there is a big difference, and it would just be worth mentioning it. The difference between impact first impact investors and return first impact investors. Because with return first impact investors, you basically are operating in the same space as a traditional investor from your return expectations, but you're trying to concentrate on sectors. I mean, I can say what I did. I just concentrated on forestry, and I concentrated on renewable energy. So of course you need some chemical processes to make the solar panels or to produce the wind turbines. But the energy produced at least has a much lower carbon footprint than with fossil fuels. So, but I don't want to compromise on the returns. Whereas an impact first impact investor, well, he's satisfied with concessionary returns or even with no returns. Okay, so these are two different spaces, and it would be good just to differentiate between the two.
I have another question. So we were talking about opportunity zones and the tax deferments and all this stuff are opportunity zones. But when you look, I forget who was talking, a couple different people were talking about social injustice, and there's no opportunity zones for social injustice or addiction or mental health or any of that type of stuff. What can be done moving forward to give people benefits to people that are trying to make the world a better place that don't really fall within an opportunity zone? Because
don't worry about that. That's just one place you can play it. But you go back to what Maurizio, those who are impact oriented, and you heard some of them today, hopefully you've listened and you identified them. They should hear your story, right? And we need to connect them to you, or those who, you know, and maybe from 3 or 4 angles on as it relates to you, either from those who want to make an impact on venture. It's a way to make, you know, you have a triple win opportunity, right? So, yep.
Hey, can I recap for our group? Can we move to the next group?
Can I just add one quick point? That it may be, because I know you're always looking for new sessions to have. It might be worth having a session on blended finance, because there's a lot of these things.
Get Torrin involved with that. What he does with PRI.
There are organizations now that are creating a market for every SDG, just like they did with carbon credit. So you'll be able to go do your work and subsidize your return with that market. So but blended finance would be a great subject, but it's a whole nother.
Yeah, definitely.
And Mark, one thing on that, addressing that comment by Richard there. Richard, first, I love what you're doing, but blended finance and the evils of impact investing are kind of compounding factors, right? Because it's capitalism and leverage that allows extractive behavior. That's why ESG type companies are doing so well, because they're highly extractive and highly leveraged at times. So if you're going to do that, do both at the same time, a discussion of capitalism applied to impact.
Absolutely. Absolutely.
I love the whole concept. That's really what with our philanthropies connecting and all of our, you know, industries and interests with impact, that's where they can meet in the middle and support them. They all need people to run those companies or initiatives from our strategic advisors. So I'm totally in it. Mike, you want to capture it?
Yeah, which group was that? Was that NextGen? I'm
Well,
not sure
were you
where
in? Just capture yours. What were you in?
I don't know what group I was in, but what we discussed.
He was in NextGen.
Yes. So 7 points. The difference between the generations is that this next generation says money does not make systematic sense. Counterpoint, why change the current system? In a few decades, it's created the most massive growth out of poverty of any system. So it's not perfect, we agree. And we agree government isn't the answer and philanthropy isn't going to do it all by itself. Education, modeling, getting capitalists to compassionate. That's 8% of the globe's population controlling 83% of the wealth doesn't make sense to many people. Our way is not always the right way. I mean, the US entrepreneur, you know, ground zero, great stuff. You know, the way we do it isn't exactly the way the rest of the world can do it. And the rest of the world, you know, wants to look to us and do it their way. But the fact is $22 trillion is moving from generation to generation in the next 25 years. It's a huge opportunity, massive, massive change. And so we got to get off of us versus them, impact versus non-impact, capitalism versus socialism, rational versus emotional. I think it's a synthesis, you know, to bring these, to find the middle ground. Like, you know, no matter which side of the US political, half of the other country was on the other side. And it's just my desperate need to understand what divides us and really more importantly, what will bring us together. Because at the end of the day, we're all concerned about, you know, having a planet we can share and children can grow up in, grandchildren. Now it's the next gen. If I miss something, anybody's free to chime in, of course.
Yeah, I think they're the most meticulous notes of any group.
Yeah, I'm totally agree with the whole shared interest thing.
What?
Totally agree on the whole. It's okay to disagree. Let's just focus on what we could agree on and get, you know, shit done.
Yeah, I mean, a lot of the existing economic engines of the world are, you know, they persist on economic rents. And, you know, you're talking about Nelson's comment on leverage. You know, it doesn't have to be financial leverage. It can be operational leverage. And the operational leverage is, you know, recreating from first principles a new way of doing things, which Nelson's working on, which I'm working on, and that has radically different outcomes just because of the technology that we have today versus what we had 50 years ago on which the current systems are built.
The comments?
Yeah, Mark, quick comment. I would just say what I care about. I'm 60 years old, so I'm kind of at the point in life where I take my boats out and float around in addition to working. But I'm thinking what happens when I'm 80, enjoy life. I'm worried about my son. He's 23, and my grandchildren coming up. The concentration of wealth that has taken place and the massive change and kind of just suppression and oppression of the third world that's going to cause geopolitical instability of a type that we never saw when we were growing up. So I worry about the world he'll be in. That's why we're pure capitalists, but we want to see a moral capitalism that leads to a more sustainable world all the way around.
Other, and God bless, we're with you.
Sure.
Any other comments, voices?
Just to build on what Mr. Daly said, there's a tendency, I think, sometimes, some people call it cancel culture, whatever, but there's a tendency to, if you don't like something, you throw it out and you start something brand new. And there's nothing really wrong with capitalism, but we're at a new level, right? Capitalism has engendered the greatest movement of wealth, development, and livelihood, length of life, quality of life in the world's history. But it's now at a point where we need to go to the next level. We need to take that, and now we had people and profit. We need to focus more on people. We need to focus on planet, and we need to focus on purpose. But it doesn't mean you necessarily throw everything else away. That system actually is incredibly powerful. It just needs to be tweaked so that our focus and attention and efforts go in a new or an expanded direction, I think. And I think that's where part of the issue is. Sometimes people feel like we're throwing out one thing and bringing in something new, and it doesn't necessarily need to be that way.
This is why I'm so passionate about impact investing. Money is not just a good to itself. Money is a tool, and it's a tool that can be used for good. And so I'm not ashamed of having some money. I'm not ashamed of using it in a way that makes the world a better place. And the more people I can convince to do it in that way, the more we're approaching this kind of ideal of a caring capitalism, which might be caring just to protect what they have, but it's perhaps not a democracy, but sometimes the tragedy of the commons is because you don't have strong rules and people saying how to use the resources. And I believe a large owner that is responsible is perhaps better than a democratized free-for-all where the resources get just destroyed.
Yeah, so this is Luke. I just want to kind of echo some of the comments there because I'm absolutely in alignment with that I think capitalism has, received kind of a stigma on it over the generations of things, but I still think it's the best mechanism to solve a lot of issues that haven't been addressed yet. And I still think that there's opportunities there that you can relook in a better capitalistic lens that blends all the necessary balance that needs to happen throughout the world. But I know just being a part of a group like this and having discussions with different companies and different things that are going on, I mean, you just see that the opportunities exist out there. And at another level too, that those opportunities, bring people out of poverty at some point, but there's a necessary personal educational journey that each of us go on too in those spaces that have to happen in order for them to create that new foundation of opportunity for them. So it kind of goes hand in hand. It's a life cycle, right? You can do projects around the world to lift people out of certain circumstances to give them a better footing, but then there's the personal thing that has to happen too. So it's not just the things that we're doing here are not just the only things that have to work in the ecosystems, to further everyone's better stance in the world. So, I mean, it all plays a big part.
Well, there's definitely some gaps we have to make up for on capitalism, but it's a definite powerful engine. What I'd like to do is also, to your point about partnering, find ways to partner. There's a really great, Chip Kempka's not on right now, but he has this, sort of like he's taking the voice and making entrepreneurship, how do you create jobs, sort of like channeling, and he's mostly focused on the emerging markets. So Chas was talking about inner city America, democratizing access to finance. There's so many ways we can do it, but I take I'm with you, Maurizio. I'm a returns oriented impact filter. I want, it has to be sustainable. Kim Colt, whether, we may not always agree on the politics, although I'm like one of the few independents in the world. But we can at least get where we can, find ways to channel resources, capital, or otherwise. Let's get that done. What you're doing with the Amazon forest, you're providing a way to make money. MJ's trying to go after addiction from, with an app with 80,000 users, trying to make it scalable. Let's just all, someone has to lead a deal. Someone has to be, I don't know if you call that the large owners. I'm not, I don't know exactly what you mean by that, but somebody has to lead, definitely. And then we can all follow. Sometimes,
one point is that, going back to the lead topic for this session on NextGen, I would encourage everyone, many NextGen in my network believe in capitalism, and we're here to do impact for-profit strategies. So this dichotomy that seems to be occurring between, the older gen and the next gen, that is often not allowing us to move forward, because presuming that, one group believes in capitalism and one group believes in sort of degrading the environment is not true. So we need to get out of our echo chambers. And if you're only exposed to older generations who don't want to sort of budge or be open to a discussion, or you're only exposed to millennials and Gen Z who don't believe in capital market, paradigms, then you're not talking to the right folks, because there are plenty of other people who cross that line. And those are the ones who, there's two things I believe in, realism, right? How are we going to actually do it, and actual execution, right? And I think we really just need to get out of these echo chambers. And it's a lot of people who go to these family office events and talk on impact panels have actually not rolled up their sleeves and understood what it takes to execute these strategies.
I'd like to follow up with what Nisha, this is Sarah. I was in the ED group, and I just love what you just said, Nisha, because there's 2 points I want to focus on to follow up. And I'm like a broken record. I agree with you that we go to these forums and we all talk about this, but now we have to act on it. So I would encourage that. The other thing that you mentioned, and we talked, this is what came out of the education meeting, and I invite Franco and Wendy to chime in. But one of the things we talked about was how we have to get out of silos and start recognizing the synergistic relationships that we all have. And I would encourage, there is a book out there called The Opposable Mind. It's put out by the Harvard Business Review Press, and it talks about integrative thinking, and it moves away from the either or, and it gets into the both and it really gives people a shift in their mindset as they're approaching this field. And so in education, the last thing I want to say is one of the things we're talking about NextGen, we're talking about education. I think it's going to start with what's going on in the preschools, as low as the preschools, as early as the preschools, of where we're putting our energy and our curriculum in what we're teaching and what we're nourishing. Wendy and Franco, I invite you to add anything about the group that we talked about.
Thanks, Sarah. No, I would have said the same thing. I think that, you touched on the point that was really relevant here, which is about collaborating and bringing learning across the board, because a lot of what we see is a lot of time wasted with people trying to reinvent the wheel over and over and over again. Whereas, a capital being, going into this company, or this area, they're all actually doing the same thing. And if somebody was able to bring all that together, actually, as we've seen with the COVID vaccination rollout across the world, when you work together, you actually achieve things in record time and have a truly, meaningful impact on things. And the only way we're going to ever do anything is by doing that.
Well, I flashed on the screen just so I do look, my lawyer says I'm not really planting seeds, I'm fertilizing soil. And the whole idea is whether it's Sarah wants to do another education event or we want to do this PRI blended finance event, that, we're the place to do it. So just, lean in and we'll support you. We every Wednesday except this Wednesday, every fourth Tuesday, we'll have these 2-day conferences. We have Tuesdays and Wednesdays where our community comes together in a town hall. But we really want to, like if MJ, you want another dive at mental health, and by the way, to Sarah's point, so team up. Yeah. Mental health meets tech, mental health meets education.
Absolutely. And I wanted to just mention one other thing. I believe in bottom line and double bottom line without question. But I do think that, a lot of problems that exist from the impact side, people just don't know about it. It's not their fault, right? And so we just have to let them know the pain point that exists. Yeah. So I am 1000% not against, the capitalistic standpoint. I believe in bottom line and double bottom line, but I do believe that there's just a lot of challenges that people just don't know about. And there's market size and market opportunity that backs it up.
And by the way, all these events, like we talk about mental health, I'm just going to show, it's really amazing. Like this was the program. You guys can all access it. You can hear about it firsthand. Whether it was ag tech. Sorry.
A forum tech.
There was a lot of interesting music there to get that jazzed up, right? But you can see all these are on our YouTube site, and we could just stop and just do replay documentaries of all the great things that we've done the last year and get the word out and get people in.
Can I offer a slightly different mix in perspective? So I moved to Boston in September, and I hadn't never really paid attention to the medical device. We switched over to making 3-ply antiviral face masks. And so suddenly I'm a biotech entrepreneur. What did I know? So I started meeting all these biotech life sciences people. We never talk about life sciences as being impact. We don't talk about it that, right? They're never included in this group, but they directly make cures for diseases, right? I was on a mass bio call yesterday with one of the congresswomen who's advocating for life sciences. Apparently every one of the vaccines had some contribution from the state of Massachusetts. Oh, that was really cool. That's impact, right? So what's the most impactful thing right now? The vaccines. Vaccines are clearly impact. So we have a sector that's absolutely commercial, absolutely has impact. I assume there must be something we could learn from it in the impact sector. Yeah. It's usually the physical sciences side and not the mental sciences side, which is unfortunate, but like there's probably something there.
So we had early this morning, and we're going to try to bring this to the fore. We had, because if you want to make investments, go ag tech. There's one. Go clean tech. Let's just focus on what we can focus on. Health tech. So it had a pop. Some of it, and we talked about some interesting deals that have happened. So we're forming these groups so that you can, again, you can have a mental health tech. All these groups can then form and interconnect. Because if you want to get a deal done, you need someone. You need a round table, people to lean on to vet the deal, and then more deals get done, more
So I apologize to Mark. I was late to the call because a friend is having a major mental health crisis right now.
Oh.
So I'm sorry I missed that part of the call.
I've learned about mental health in the last 12 months. I'm with you, and it's all exacerbated by what's happening.
So Mark, I'm not sure if we're open to ideas, but maybe it might be, we can leverage one of those deep dive or one of those panel sessions as the months unfold to revisit the groups and maybe approach it from, how the technology sector is like, oh, we got all these challenges. Why don't we do a hackathon to try to solve this issue and get a bunch of people in there and kind of do it with the investing portion of it. Say, look, here's the challenge. Let's set it up at a macro level and then say, who's on the deck to provide solutions and where are the gaps and where are the investment opportunities.
I feel like you've been reading my notes, but we're totally in sync. I'll show you and find it. Well, because what we're trying to do, part of it's capital, and part of it is how do we support these companies. Let's take MJ. Let's throw this on the screen. But it could be any company. You need strategy, you need partnering. This is from the investing side in some ways. We're trying to do the same thing for how do we support our philanthropies, program execution, endowment management, because we got all kinds of people who fit into different categories.
Right.
And if we're trying to come up with the way to channel our strategic advisors, not only to help companies, but philanthropies, or just, so it's not perfectly set up for this, but I love the idea of a hackathon. We also had this idea of let's pick one or two issues and just completely have at it as a community. And I think that's where we want to go with, our philanthropy side. We're trying to figure out first who's in what philanthropy. That sort of comes back to our onboarding. If you could just all help us take inventory. If you go to 361 firm onboard, onboard your philanthropies, just like our direct deals, that all goes to a funnel. And, our hope is within a month, just like, well, this is our private side of our deals, public side. We want to have the same thing, and everything's on our app with hashtags. So if you did a hashtag mental health, you should be able to know, you should be able to follow the people, the deals, and the posts and information on each of these issues. That's where we're heading. I love that hackathon idea. It's sort of where we're.
So, I mean, I'd be willing to help kind of facilitate that and kind of create the environment to be able to do that. I have a couple ideas around that could be useful.
I think I almost feel like each company needs like you need one, MJ, in a way. Let's just half day retreat on Lucid, or Nisha may have one of her portfolio companies that if people want to weigh in, or Sales got his hand up. I don't know if he wants one for his company.
For my industry, actually. The industry, I think.
I mean, you need people like Jim Hawk, and ultimately, but he's we may lose him to a new gig. We will never completely lose him, but back to where we were is, just maybe you can think and get back to me on, for us, how we can do a better job. And maybe you've got, there are other metrics. So definitely on events, we can do all kinds of things to help keep populate some of these themes. And I'm just trying to, my ask is you can help us with the inclusion, more impact deals, all the way through the funnel. I don't know if Catherine's still on, keep partnering with the impact measuring crowd, to some earlier points. Don't have to reinvent the wheel, so partner, right? Look at what Richard's part of some organizations, just to Sarah's earlier point, maybe what part of we can help interconnect silos of these organizations where we all are in different ones that could and should be working together. Take an inventory of our philanthropies to connect, have a roundtable around each of the SDGs, and then connecting those strategic advisors. And then from that, then we'll have an informed view of where our foundation side could go. Maybe I'll do this in the form of a survey as a follow-up.
Yeah. I'm just thinking, because a lot of the discussion was around, how we're dealing with not so much solving challenges, but there's opportunities to meet certain challenges that people are focused on. And then, how do we approach that philosophy-wise, right? Was more the discussion theme, it seemed like to me, throughout the engagement here. But really kind of repositioning the focus and the discussion on really the actual global challenge or the problem, and then kind of backfilling that with all the other different points.
Part of it is just getting us all connected, and then we'll you almost go into subgroups to go tackle things. And then other comments, viewpoints?
I just have one other comment because I was about to leave and I was going to put my contact information up, but this is Sarah again. And the one comment that I have is there are a number of groups that are actually trying to do exactly what 361 is trying to do as well. Like during a day, I cannot tell you how many requests I get to be part of conferences and organizations to do brainstorming and to bring ideas together for, future implementation. And I guess, again, I want to press forward on not only talking about things, but acting on them, because I think everybody's time is really valuable and we're all getting pulled in 20,000 different directions. And so I continue striving towards moving all of our discussions into action.
Of course. Other Cam, you've been quiet.
I've been listening. This was pretty good event. I mean, of course, yesterday event on 5G was amazing too, but this one.
So this doesn't measure up to the amazing of 5G.
I believe it does, because technology, if it doesn't have the purpose behind it and doesn't have the finance, it won't go anywhere. I mean, actually, part of the conversation I had on 5G was a use case for transportation, where I think there was a fellow from Singapore. I think his name is Brian, which I'm going to connect with him offline because we got connected.
He's in Manila.
Okay, but in his profile it said Singapore. So he actually talked about use cases. He said, what can we do with 5G that justifies the price? Because 5G for telecom is almost like autonomous driving for auto industry. You could build the technology, nobody wants to pay for it. So in relation to today's conversation, if there is no financing, if there is no job creation, then what's the point? But at the same time, I think the way, I don't know if you did that intentionally, it was a good idea. You brought a very diverse conversation, Valerie, Kim, and Eric. I connected with the CEO of Chevron 3 weeks ago or a month ago. Oil company want to do innovation too, but unfortunately, their whole focus for the past, 70, 100 years has been around one product. So they need help.
Yep.
it's not like, I mean, they don't enjoy, seeing the planet go down the drain. And I would say, look at the COVID, how we came and we put all the best mind and solved the COVID through vaccination. I'm not totally happy with the way vaccination program have been done. Each country has done their own. China coming up with the Sinovacs that they say whoever comes to China needs to be vaccinated with Sinovacs. I mean, I was hoping maybe humanity could come together and have one vaccine and go and vaccinate the entire planet, but also with a good study, because I got I think I mentioned earlier today that I was involved with the World Food Program and IBM for this initiative called Digital Farming, which is about food, producing high nutrition food with less fertilizer, herbicide, pesticides, and water. Why don't we look at the good immune system? Why don't we look at the mask? I mean, vaccination is good. I just feel we should have done a better job coordinating so we don't have some side effects 10 years, 20 years from now.
Well, what I'm happy about is all the interconnecting is leading to a lot of deals. And sometimes they need more shepherding than others, but organically this is happening. So I'm seeing things get done. And I think we can get them done also in the philanthropic and the gaps. And it's sort of like if you could just share what you're doing more so that we all know it, the more we can just put our cards on the table, but whether it's not just a deal, but your philanthropies and your interests, your SDG interests, and what we're going to do is a big mapping exercise.
Yeah, I mean, every time I want to speak, I want to say thank to Mark, because people underestimate how difficult it is to bring like-minded and sometimes not like-minded people into the conversation and have a very meaningful conversation.
Yeah. But we'll find our common, either we'll enlighten or we'll find common ground or we'll just disagree. It's okay. Wherever we can agree, let's collaborate.
We call it creative conflict, right? Which is good.
As long as it's
and the thing is, everything at the end, we want to make sure humanity can survive and thrive, and we should enjoy our life. Mental health, I noticed there was a comment from one of the people that I've followed in this group. At the end, we want to make sure we have a more meaningful life for everyone. COVID really did a favor to humanity to bring us together. Of course, sometimes we don't see it at the beginning. There's a lot of hate against Asian, thinking like, it's a blame game. No, we're in this together. Imagine we were 8 people all living in Mars. And do we want to fight with each other or do we want to work together? COVID was the closest thing on a science fiction to what you call, alien attack. So again, we do need a conversation. We do need, impact investing, because otherwise nothing will get done. I think role of women is very important, because for my startup, I just mentioned that I recently co-founded a car company. I still say car, a digital platform company. And I want women to invest in it, because I believe women have a long-term view and very meaningful view on investing and return.
Onboard your deal and make that one of your asks.
Sure, I will do that, and actually that's because I always wanted to promote 361 firm on all the social media that I'm involved. Mainly these days it's Clubhouse. I think more people need to know about 361 firm, because this is how it is. The nature is decentralized. Nature is very diversified. So I think that is the hope that I have You know,
I know
I'm basically.
I feel like I'm letting you down because I'm not embracing Clubhouse as much as I could or should.
No, actually, you know, there's so much time in a day. You know, trust me. But because you know, I always try to make sure I attend your meetings because I already connected with Jonah to learn about gaming. I had him talk to my son. So you have already been very, I don't know what is the right word. You touched the way I do business. And I want to make sure you're successful, and what I do, I make sure I promote you. So with that said, I want to make sure others get a chance to talk so I could listen. Thank you.
It's always good to hear your perspective. Michael, I know we were supposed to speak about your company, but you got sort of, you came into our community. You want to introduce yourself?
Sure, and thanks, Mark, for having me. I really appreciate this. It's been nice being just a fly on the wall for a few minutes and hearing a lot of good and interesting and diverse ideas. So thank you. So I'm Michael Bodley. I'm a journalist, the dirty J word. It's not always as bad as it sounds. You know, promise this is off the record. I don't really have the time or energy to write down the notes anyway. But in all sincerity, thank you. So I'm a former hedge fund journalist. I used to write for the industry newsletter Hedge Fund Alert. I think some of you in this chat I know and we've spoken before, and some of you I haven't. So it's nice to meet good, like-minded people in any event. I'm working on something new, and I'm happy to share more details about this offline if it might be of interest, but it's a partnership through thestreet.com and another entity. And the idea here is branded as The Street Crypto. This is kind of semi-stealth mode. It's coming out, but again, like-minded people here to cover the institutionalization of crypto and blockchain investing. And I'm happy to add value, you know, where I can with you all and kind of share color and the like on that. So I think you're raising a lot of good points about communication and how you present a unified message, and I'm always happy to chip in on that in general.
Oh, that'd be interesting if you would have been a part of our journey for the last year and could have documented it. But is this Street and Crypto, is it yet another journalistic formulation, or is it a different kind of business?
So there's a couple of ways of looking at this, right? I mean, there's the marketing side of things, you know, for instance, kind of working on relationships with some kind of notable players in the crypto space, right? And kind of conference relationships and things that we're sorting out now. I'm heading up the editorial side of things. So that's going to take the form of a weekly exclusive newsletter, which again, those of you who are familiar with HFA and what I did there, the kind of idea here is Hedge Fund Alert for crypto. So we kind of want to write about, you know, family office deals for one, kind of in the crypto space, right? I mean, I know that a lot of you are kind of involved in some of these blockchain VC, either co-investments or, you know, VC deals. There's some utility with PE stuff there. I think the crypto hedge fund and private placement space is really taking off. So it's another way that I'm kind of happy to be a resource, share color about what I'm hearing in the market. I think that there's a lot of interesting kind of one-off things happening, like Mark pointed out, and there's something to be said for unifying the message, right?
Mm-hmm. Did you read this? I'm just very curious about the Tether and what's real. I mean, obviously it's everything's real, but it's like I lived in Russia for 8 years, and the first couple of years in particular was cowboy land, because it could be.
That's an interesting point. And, you know, to be honest with you, this is kind of something I'm learning as I go, right? Like I know that, you know, family office space is reasonably well. I know the hedge fund space reasonably well, prime brokers, kind of sell side relationships like that. To an extent, crypto is new to me. We're gearing up to launch a new publication in about a week and a half. So it's kind of crunch mode here, but things are coming together in a good way. All to say, I don't really know if Bitcoin's going to go to the moon, or if it's going to go to zero, or if Tether is going to go to the moon, or it's going to go to zero. I don't. I'm agnostic on it, and I think that's both really interesting.
In which order?
That's a really good question. Yeah, I don't know. I'm happy. Like, if you all have any other like specific questions, I know it can kind of be rare to get like a.
What we do is on every subject is we try to form a roundtable. That's the 360, and to get many views. By the way, I should put in my background that I was a journalist myself. I was the editor-in-chief of the Dennisonian, then I was of the Michigan law newspaper, the Rest Day. So there's 12 sides of every story, and just try to just like a deal, try to diligence it from all sides. In blockchain, I have my roundtable for cannabis. I have my entourage. I do not yet around crypto. DeFi, blockchain, crypto, no.
I think there's a few things here, right? And it's kind of an interesting sort of problem. I mean, DeFi or decentralized finance, I know there's probably varying levels of familiarity in the room here, right? And they're all really abstract kind of topics. Like, I'm coming at this from the mindset, like, I know what a long short equity hedge fund does, right? Like, I know how Goldman Sachs prime brokerage department works. I know who the players are there and, whatever else. But part of what we're doing, Mark, earlier, you were talking about kind of mapping all of these disparate ideas and disparate people and beliefs and things like that. I think that's really interesting. I think the parallels, that's something that I'm looking to do in the crypto space, because there's not really a consolidated source for that, right? So we're coming out with this weekly newsletter. It's going to be called Crypto Investor. And again, I'll drop details and stuff, happy to share offline and ways to get in contact. But like that, this is going to be in your inbox at, whatever it is, 6 a.m. Eastern every Tuesday. It's going to be a reasonable kind of price point. This is everything you need to know.
Well, at 11 a.m., we have a weekly briefing. You could, from time to time, do a crypto spotlight. That's sort of what we're trying to do. We have a macro view of the world, and we're trying to do some micro spotlights, not every week, but maybe you could come on once a month after your 6 a.m.
Michael, can I ask a quick question?
Please.
Or make a suggestion, perhaps? I've been a follower of the street for a long, long time, former hedge fund manager as well. I don't know, Mark, you may know, but I don't know of anyone that's done a market map of crypto, like a visual map segregating the different areas. And the street might actually be the group to do that. If not, where you update that and add, that would be a really, really valuable tool if someone else hasn't already done it.
Richard, the Visual Capitalist, have you seen the website, The Visual Capitalist?
I think I have something a long time ago. Did they have
did something like that about a year ago?
Okay.
Yeah, I'm
You might go
now
take a
on the
look.
site.
Yeah.
But I think they did do something. But yeah, Visual Capitalist has a lot of that. They do a lot of data visualization of putting things in perspective like that.
So I think that's a great suggestion. Thank you for that. And that's something we're kicking around, right? Like the challenge here is the Inside Baseball is the weekly newsletter, right? Crypto Investor. And this is something that we're working on branding. That's going to be like a body of an email, because what we want to make it really low touch, like for you all, frankly. Like I know that your attention's dragged in a million, different ways, that kind of thing. An org chart would be great. Like, to give you an example, a reporter who's working with me on this is developing an org chart of who are the power players, like in the Biden administration, that have anything to do with regulation on crypto and blockchain. And I think that's a way to kind of add value to all of this as well.
There's actually a CIO of a family that went over to FINRA, and he's in charge of crypto inside FINRA. Then there's another woman from our Future of Work, part 3, focus on women. To remember, she's also at the SEC overseeing crypto. And then you got the Federal Reserve. One of my former lawyers that I worked with, this is her. She's with the New York. She's looking at this issue. You got the Europeans looking at this issue. You had India shut it down, China shutting it down, trying to. Journalists need to shed light on it badly. I'm afraid of what it's doing because we don't really understand it, and I hope it's for good. Blockchain's for good. I see a lot of I don't know, potentially crazy activity. Hopefully, it's good activity. I don't understand it yet.
Yeah, I would agree with that. And, you know, I'm always really open to kind of suggestions, because something I did at HFA, and I think that why HFA Hedge Fund Alert is sort of different than a lot of other publications, is that we really strove to like understand the market, right? Like these things that I've been talking about, like I can talk finance in finance terms. And I think that, not to dunk on other journalists, many of which are my friends, but that's not always the case. So I think we're also viewing this as a quality barometer, right? Like how do we separate the noise from what's worth paying attention to in crypto? And always happy to field suggestions on that. And the other thing I would add is, in addition to the newsletter, as I'm immersing myself in the space, talking to people, I mean, look, I'm happy to just more informally just share color, right? Like, I mean, what VC kind of plays seem to make sense, and why? You know, is there like a future for liquid digital asset hedge funds? What's going on with like this Bitcoin ETF? There's a lot of like really interesting problems that I think that some of these people in the room, even if you're not super familiar with crypto, you all have a lot of skill sets and ways to get involved. It is like taking a plunge into it and getting involved like earlier rather than later, I think will pay off down the line big time, just personally.
We've had a couple events. One was the head of Cambridge for crypto, former Marcos Bremis. And you can hear his. We did a crypto deep dive in January. I think it was a shallow dive. We're not really, I mean, you have to sort of immerse. And one of my interns is in Cambodia. You know, he showed me, he launched cryptocurrency. I was like, what's driving it? I don't know.
Yeah, and you know,
I'm comfortable enough myself to say I just don't understand it yet. And yet, Denison's endowment CIO has made a case that we should be, as a form of storage, we need to be. They looked at it like gold. Some of our families are super savvy in it, or seem to be. I'm just not.
Yeah, I mean, I think that sort of it depends what you're like.
And I apologize. I guess I've let this rift in because you joined. We were talking about takeaways from an impact next gen. Although this is definitely a next gen issue. Do people want to continue to talk about this, or should we?
It's a good idea, Michael. Good luck.
Thank you. I appreciate that very much.
Yeah, we want to, let's, we need your light, and I like your light. So if we could bring you in to the next crypto event or spotlight, that'd be great.
Awesome. Thanks again, Mark, and everyone else. I appreciate the input.
Any last words? We're supposed to finish up around 1. So, any last thoughts? Hi, Yvonne. Cedric, we met for 5 minutes yesterday. You got a sense of what we do. Jennifer, I know you're an ESG focused investor. We haven't had a chance to really sync.
I did. Very impressive. I appreciate being involved with this today and look forward to connecting with a number of individuals.
Awesome.
Mark, yes, I'm looking forward to connecting. This event was wonderful. I learned a lot and have made some connections, and I might have some transactions to put forth for you. So
good. Bring them on. Beautiful. Todd, you joined late.
Yeah, Mark, it's amazing timing. Quite honestly, I was just cruising an update on this on LinkedIn, and I just was sent by somebody and popped in, and I'm amazed at the depth of the conversation thus far. I focus on industrial real estate and, basically helping companies find industrial distribution capacity across the country. One of my deep areas of focus, though, is employment of people with disabilities in the industrial environment. And we have a long track record of years and years of successful models at Walgreens and Advanced Auto and a number of other folks we've worked with that basically put employment models in place for people with disabilities in a distribution environment. So that's kind of my personal passion based on some of my past experience. So just happy to talk to anybody about any of those topics and contribute however I can.
Yeah, we're sort of doing a 360 diagnostic of every person to help get a sense of what your philanthropic sides are, what your experience levels are, where you may want to be a strategic advisor on the special needs issues. You know, there's like 20 people that are focused on special needs from all angles. You have the logistics angle, industrial or otherwise.
Yeah, Mark, this is a little different in that this is really a business solution that employs people with disabilities. It's less of a charity, quite honestly, but there's huge financial impact for companies that choose to do it.
That's awesome.
Yeah.
But it does interconnect.
Absolutely. Absolutely.
Well, who else has it? Nick, I don't think you've introduced yourself to the group.
No, this is a great organization. I'm very happy to be part of it today. I've really learned a lot. Yeah, I have experience with the C-Suite network, kind of a similar platform.
Oh, that's right, the C-Suite network.
Yeah. Do you know Jeff Hazlett and Trish? Okay, yeah, I'm good friends with Jeff. I was working with Greg Greenberg on the podcast program.
Mm-hmm.
But yeah, I like what you're doing. You're building development and good causes, promoting.
Well, back to partnering. Don't need to reinvent the wheel. We should just extend each other's bats.
Absolutely. Well, I mean, whatever you can think of with C-Suite, I'm happy to
do a call. I'm at calendly.com/361 firm. Just book a block.
Can you put it in the notes or email me? That'd be great.
Well, I'll do it. If you just think calendly.com and my firm name.
Okay.
calendly.com/361 firm.
And I'm also involved with SBMT, Society of Brain Management and Therapeutics, with Babak Kateb.
Okay.
And I remember hearing someone talking about mental health initiatives earlier.
Yeah.
And I put something in the notes that that they're one of their highlights, but I know that whatever I can do to help.
I haven't seen I have not. It says 99 plus comments in the chat, so I haven't had a chance to look.
Yeah, all good.
But we do save all these chats. We've decided that we're going to publish the archives if some point, but I'm not sure that's from a privacy standpoint. We never told people we would, so we probably shouldn't. But at the same time, we do record these. But that's good. That the person there is it's lucid. He's focused on the addiction side, but there's so many aspects. People need help that aren't getting it. A lot more people need help.
It seems you guys have a really impressive global presence. I got the impression of throughout the conference.
That's from just living around the world.
I mean, so you should definitely build on those resources, which you're already doing.
Yeah, no, it's if you ever looked at our background, that's really the one firm is an Arthur Andersen where I was a partner, and I don't know if I'm showing my screen or not, but I'll show it. Yeah, it's just I know I was with the family office for a while. I'm going to add my journalistic history, Michael, into here. But the idea is actually alumni mentors, journalist, and then client orientation, global. And then I'm on the buy side. I'm thinking of how to invest. And then I'm outside of one family, trying to create what I wish we had. And then I was doing alumni stuff, and then I merged it all. So we're in we have no shareholders except me, but for now, but I don't, if I had stakeholders, then I would have to angle one area or the other. I'm just sort of not having that at the moment. So we can just sort of create what I think should exist. And back to journalism, that fourth rail is so missing in society right now. It's all for profit, not that it shouldn't be, but you know, as Eric Lindbergh said, one of our speakers, he guarantees that the head of Fox and the head of CN are going to hit their bonuses this year, and they're going to do it in sensationalist ways. And someone else was talking to your echo chambers. We're all just sort of, and social media is making it worse. You know, everybody's completely siloed.
I would agree with that, right? Like, I mean, I have even think about email newsletters, what I'm talking to you about, what I'm going to do with thestreet.com, right? I mean, email newsletters were designed to cut through the noise, like the Twitter effect, like, you know, all of this online stuff. And now I'm like, I have 27 email newsletters in my inbox every morning. And how many of those do I actually read? And you look at the rise of like Substack and like all of these things. So I think that's a really interesting problem. It's a really interesting problem journalistically, and it's a really interesting problem for you all and how you're trying to convey your message, right? I mean, it's, I don't know that there's an exact answer to it other than just improving content diet, which is what I'm trying to do, cut through the noise to the best of the ability and just give people quality, like just the facts content. I think that's catering to your audience, right? So I think that's a parallel what you and I are both trying to do in different but similar ways.
You consult as well?
Not right. Not right now, but you know, happy to talk about it offline or steer you in the right direction for sure.
So right now, unfortunately, our technology hasn't caught up, but we have strategic advisors. It sort of goes back to what I was showing earlier here, is to help companies lean on people if it's, you know, if I need a fintech expert like yours, as we're, well, and it mainly there's like 5 or 6 different streams. One is how to invest. You know, if I want to do fintech or, you know, whatever it is in any country or industry, and have expertise, so that it's sort of like a hyperlink if you need the Asia experts that overlap with an industry. And everybody back here is sort of like, there's a guy I love, I really probably shouldn't, well, but all these people have sort of said what their availability is to help. And, you know, so we interconnect, which goes back to this. I believe in what happens is, talk about incestuous. You end up having the investors just talk among themselves, which we had this morning, because you need some of them. They don't want to, definitely don't want journalists around. But I believe in the interconnecting everybody. And while we're by soon at 1,000 people on our app, what's really blowing it up are thought leaders and the strategic advisors. Do you know what GLG is?
GLG, you said? No, I'm not.
It's like 10,000 plus consultants. The difference is that it's not a community. So if you can actually have a community and then resources. I mean, even like if someone wants to understand industrials or want a second point of view on a real estate asset, they can go to Todd.
Yeah, Mark, I'm actually in the GLG network. So
yeah. So you know, they have better technology than we do. What they don't do is get together every week.
Yeah, same concept, but yours is a little bit more, it seems like, personal.
Yeah, and I've got to jump in a minute, so I apologize, but I thank you again, Mark. This is really good. You know, maybe what I'll leave you guys with is like, this isn't really a sales pitch. Like, I don't care if you subscribe to my new products. I mean, I hope you do. I find it interesting. But like, I genuinely, like, yes, I'm a journalist, but I'm a person too. I'm pretty decently well connected in the family office space and the like, and I'm really happy to talk like what we call off the record and kind of just compare notes and color and all that good stuff. I think you guys have a really interesting organization here, and I appreciate the invite.
Awesome. Hopefully we'll help each other going forward.
Cheers. Thank you.
See you, Michael. All right, we're at the top of the hour. I always give an extra hour. So all good. This is great. Thanks for everybody's contribution.
Thanks, Mark.
Thank you, Mark.
Be in touch.
Thanks.
Cheers.
Thanks, Mark.
Thank you, Ken.